So today we are going to complete Introduction to GST, then Input Tax Credit, and if time permits, I'll be starting with taxable event under GST. That's the agenda for today. Okay, and Input Tax Credit I have selected first because that's a very important chapter, and even from exam point of view also the weightage will be more. So that's why today we are going to cover that. And I don't want to start with directly input tax credit because some of the students are attending for the first time, so they will not know what is it about. That's why I'm first discussing the introduction to GST. And the lectures will be taken from two books. So revised book and the practice manual. If you are already having the revised book and practice manual of previous attempt, May 23, no need to buy new book. The same May 23 book you can use. Suppose if you have purchased for November 23, superb. So you have only May 23 book. So definitely that is useful, sufficient. You don't have to buy. See, I can sell also, correct? I can tell no, you have to buy the updated book. But I don't want to do that part, try to understand part. If you are having November 22 book and all, so kindly go for the new book because from November 22 to November 23, lot of amendments are there. But May 23 to November 23, not much amendments. Okay. And suppose if you have already attended some regular batch, etc. and all, you try to use that book itself. That will be sufficient. Anyhow, I will be showing the PDF in the screen and I will be explaining. If there is any new points, etc. and all, you make note in the book itself then and there. Okay, fine. So we are starting with the first chapter, that is Introduction to GST, and after few chapters I will give you the ABC analysis, etc. and all. Okay, so total we have this 12 segments, but in these 12 segments what we have for syllabus, so these 12 segments we are going to discuss. But in this updated book I have given few more chapters. Actually up to 12 is only there for your exam, November 23 exam, as this book is useful even for May 24, but it does not mean you will be writing for May 24. That's not what I mean to say. With that objective I did not give this. So my objective here is that if a student is purchasing for one attempt, maybe they can prepare early also. That's the reason why I gave. Okay. So even you can use this book, you can give it to those who are writing for May 24. That way you think, okay, you are going to clear this November exam, January 28th result will come, and after result you don't need this book. So you are going to give this book for your juniors and they will make use of it. Done. That confidence you have. See, only you should believe in you, dear. Only when you believe in you, others will believe in you. If you yourself is not believing, others will tell like, okay, fine. So next time. So if not May, then November. If not November, then May. That should not be the case. So daily when you get up, so have a feeling like this is going to be my last attempt for CA intermediate. Whichever group I am writing, group 1 or group 2 or both groups, this is going to be my last attempt and I have to clear this. So let's make a manifestation in your heart. You understood? So daily when you get up, this should be your request to you. So for your subconscious, you tell, see, this attempt you are going to clear. Like that, okay? So therefore, only when you tell to yourself, your heart and mind will listen and it will push you. Okay, prepare, don't waste your time. Don't spend your time on Instagram. Don't spend your time on something else. So please read. Like that, your mind itself will tell you. So that is what you need to believe in. Okay. So therefore, you are going to clear this November 23 attempt, and these 3 chapters are not actually relevant for November 23 exam. That is this segment number 13, segment number 14 and segment number 15. These 3 segments are for new syllabus. So that's why we are not going to cover this in this particular batch. And so some of the students messaged me that, sir, we are appearing for CMA intermediate also. Is this relevant? Yes. So this particular portion will be relevant for CMA intermediate also. and extra there are some more chapters only as usual that I will upload in my YouTube channel. So those who are appearing for CMA Inter, suppose if some of your friends are appearing for CMA Inter or you are appearing for CMA Inter, just tell them you can watch these lectures. Extra topics, it will be there in the playlist, so they can watch that. Okay, so the same portion of GST is applicable for them also. So we have on total 12 segments here. In this, the first segment I am starting with is Introduction to GST. This Introduction to GST is mainly useful for MCQ purpose. We will not get any descriptive question and all. Maybe rarely we may get 1 or 2 questions on that, but otherwise it will be for MCQ purpose. Now, what is that we have in this Introduction to GST? First, so when the GST has been formed and what is the year and how it formed, etc., we are going to see. So what is the effective date of implementation of GST in India? 1/7/2017. 1st July 2017 is the effective date of implementation of GST. And GST required a constitution amendment. So therefore, one constitution amendment has been happened and then only GST came. So what is the year in which constitution amendment has happened? Is it 2017 or 2016? It is 2016. You can see here, Constitution Amendment Act was passed in August 2016. Constitution 101st Amendment Act. So that is the second point you need to remember. What's the first point? The effective date of implementation of GST is 1st July 2017, and Constitution Amendment Act was required in order to bring the GST. That Constitution Amendment Act happened in the year 2016, not 2017, 2016, and 101st Amendment Act. And before Act, it will be in the form of a bill. So that bill was presented in which year? 2014. Constitution Amendment Bill 2014, Constitution 122nd Amendment Bill. These are the 3 points you need to remember first. So effective date of implementation of GST 1/7/2017, Constitution Amendment Act, that is 2016, 101st Amendment Act, Constitution Amendment Bill 122nd Amendment Bill 2014. And thereafter GST is implemented in India with effect from 1st July 2017, with effect from 8th July 2017, it is made applicable to Jammu and Kashmir also. And therefore, GST law is applicable across the country today. So there are some laws which will say, no, it is not applicable to Jammu and Kashmir like that, but GST is not like that. GST is applicable across the country. Now, this GST is an indirect tax. And what are the different taxes that we have? We have 2 taxes, direct tax and indirect tax. And this, in one attempt for 2 marks, they have asked differentiate between direct and indirect tax. So it is simple. So the one who is paying the tax will have the burden of tax, that is known as what? Direct tax. So then indirect tax means what? The one who is paying the tax will not have the burden. He will in turn recover it from the next person. That is known as indirect tax. That is the meaning first you need to write. Then you need to write about the nature. So what is the nature of direct tax? Progressive in nature. Whereas indirect tax is regressive in nature. What is the difference between progressive and regressive? Progressive means if you are having higher income, you will be paying higher tax. If you are having lower income, you will be paying lower tax. Whereas regressive means what? Irrespective of your income status, the amount of tax that you pay will be same. That is known as regressive in nature. That is the difference between direct and indirect in that. Then tax burden. So who will have the burden in case of direct tax? The person who is paying. Whereas indirect tax, the ultimate consumer, the one who is consuming the goods or services, he will have the burden. And what are the various direct taxes that we have? Income tax, only one income tax is the direct tax component. And in indirect taxes at present, we have many indirect taxes. Many indirect taxes we have, but the major indirect tax is GST and customs duty. Now, let's try to understand as to how many indirect taxes that we have and why am I telling that the major is only GST and customs. Before 1/7/2017, we had lots of indirect taxes levied by central government and state government. Indirect taxes will be levied on happening of one event. So one event will happen. Upon happening of the event, the tax will be levied. That is known as taxable event. Indirect tax is a event-based taxation. So we had in the past, so central government used to levy some indirect taxes. So what were the indirect taxes levied by central government in the past? Excise duty, central sales tax, service tax, and even customs duty used to be levied by central government. And central excise duty used to be levied on manufacture of goods, and service tax used to be levied on providing the services, and central sales tax used to be levied on interstate sales. When it was before 1/7/2017. What is the effective date of implementation of GST? 1/7/2017. So before this date, these were the indirect taxes levied by central government. But in that, except customs duty, central excise duty, service tax, and central sales tax got subsumed into GST. What about customs duty? Customs duty is still outside the ambit of GST, not subsumed into GST. What is the meaning of subsuming into GST? Means merging into GST. And in customs, there used to be some additional customs duties called as CVD and SAD. Countervailing duty and special additional duty. CVD means countervailing duty, SAD means special additional duty. You don't have to go deep into what is CVD, what is SAD and all. There used to be two additional duties called as CVD and SAD when on import. That CVD and SAD also got subsumed into GST. This much you remember. So therefore, what are the various indirect taxes levied by central government that got subsumed into GST? All indirect taxes except customs duty, including the additional customs duty, CVD and SAD got subsumed into GST. That is the first point. Okay. Then second point, what about the indirect taxes levied by state government? So there were many indirect taxes levied by state government, I told you, but not all are subsumed into GST. Only 6 specified indirect taxes got subsumed into GST. What are those 6? Try. Entertainment tax, luxury tax, advertisement tax, correct, someone said lottery and betting tax, then value added tax, then purchase tax also known as octroi. So these are the 6 indirect taxes levied by state government that got subsumed into GST. When it was levied before 1/7/2017. With effect from 1/7/2017, all these are part of GST. So what are the 6 indirect taxes levied by state government? Easily remember. Entertainment, okay, then luxury, then advertisement. 3. Entertainment tax, luxury tax, advertisement tax, and then so lottery and betting tax, then value added tax, purchase tax. So these are the 6. What are the other indirect taxes levied by state government not subsumed into GST? There are many. Professional tax, local body tax, property tax, municipal tax. Are you understanding this? So these are the indirect taxes levied by whom? State government. Even now are they continuing this? Yes. So because that not got subsumed into GST. What about local authority taxes? Whether it got subsumed into GST? No. Even local authority, whatever they levy. So like municipal taxes, corporation tax, water tax, etc. that they levy, so that is not subsumed into GST. So how GST is formed? So 3 points you need to remember. All indirect taxes levied by central government except customs duty got subsumed into GST. Even CVD, what is the full form of CVD? Countervailing duty levied under customs. So why is it levied under customs? To counterbalance the excise duty. So excise duty's duplicate version is only CVD. As excise duty is subsumed into GST, CVD also subsumed into GST. And special additional duty to counterbalance sales tax. Sales tax got subsumed into GST, so this special additional duty also subsumed into GST. Then second point is what? Specified indirect taxes levied by state government. What are the specified indirect taxes? 6 specified indirect taxes. So got subsumed into GST. And this indirect taxes levied by local authority not got subsumed. What are the examples for that? Property tax, entertainment tax, professional tax, etc. not got subsumed into GST. Therefore, finally, what are the various major indirect taxes that we have at present? GST and customs. Okay. Now, this may be tested as a short note question like to how GST is formed. So, these 4 points you need to write. Okay. Then, so far not tested. So far not tested. Whatever is tested, I have given there with the relevant reference, like which attempt they have asked, etc. Then next, model of GST. So whether we have single tax model or dual tax model in India related to GST, dual tax model. Income tax is single tax model or dual tax model, single tax model. So fully it is collected by central government and thereafter it will be given to the state governments. Whereas GST is a dual tax model. So in dual tax model, what will happen? Central government also will levy and state government also will levy. So that is the meaning of dual tax model. And therefore, that is the reason why at present, so whenever there is a transaction, CGST some percentage we pay, SGST the same percentage we pay. So that is the meaning of dual GST model. And India adapted this model from which countries? Brazil and Canada. Easily you can remember. Now Canada is in news for all bad reasons. Okay, so you remember Brazil and Canada. India adopted dual GST model from Brazil and Canada. And what is the meaning of dual GST model? Where both CG and SG has power to levy on the common tax base. Then, so what are the various types of GSTs that we have? So total we have 5 types of GSTs: CGST, SGST, UTGST, IGST and GST compensation cess. Like that 5 we have. But these 5 depends upon whether a transaction is intrastate supply or interstate supply. What is the difference between intrastate and interstate supply? If the location of supplier and place of supply is in the same state or same union territory, then it will be known as intrastate supply. What are the 2 factors that we need to see? Location of supplier. And what is another factor? Place of supply. Now in exam, you should be careful because what they will do is that the first question that you have is a 8 marks question. In that 8 marks question, always it will be computation of net GST payable question. From 2018 attempt to 2023 May, the first question they did not change. It will be always the same computation of GST payable. In that computation of GST payable, what they will do is that they will give some transactions which are intrastate, some transactions which are interstate. And always we need to present it in a 3-column format: particulars, CGST, SGST, IGST. Because in that first question there will be input tax credit related adjustment also. So this input tax credit, whatever is there, that will be adjusted against the gross liability. So for that we have certain provisions related to manner of utilization. Due to that reason only, we should never do it in a single column, because some of the students shared their this RTI copy with me. So in that, so their answer is correct, but they did this mistake. Everything they have put in one column itself. Because of that reason, they did not get full marks. For 8 marks, answer is correct. Notes also they have written, but they got only 4 marks. See, in exam, if you are not getting marks, it's not because you are not intelligent. You have the knowledge, you have the subject knowledge, you are performing well, but you don't know the rules of the game. That is what many times I feel. So because we are going to the exam hall, like we are going to cricket stadium with a baseball bat. You understood? And we think that like how baseball is played, like that only cricket is played. So without knowing the rules of that game, if you go to that game, how can we win in that game? You understood or not? So that's why these are the small aspects which we need to keep in mind. We should be cautious. Also, try to present it as neatly as you can. Okay, because your answer sheet is going to be your face. They don't know who you are. They don't know which gender you belong to also. Male, female or others, they don't know anything about who you are, what you are, etc. They know only the answer sheet. In that answer sheet, what you have written, based on that only they will be able to give the marks. So that's why the presentation should be good. And this first question, we will be preparing with a table format: particulars, CGST, SGST, IGST. Now, you need to know whether it is intrastate supply or interstate supply. Then only you will be able to put it under the respective columns. That's why we have to identify in the question, the moment you read the transaction, first you see what is the location of supplier. Easily you will know who is the supplier. So, what is the location of supplier? So, what is usually the location of supplier? If they are registered in one state, that state is the location of supplier. If they are not registered but providing services some other establishment, from whichever establishment they provide service, that will be taken as the location of supplier. Is it clear or not? So, usually registered person, what will be taken as the location of supplier? Their place where they are registered. Now, in the question itself you can find. So, Mr. Aditya in brackets registered in Maharashtra, like that they will give. So, that Maharashtra will be taken as the location of supplier. And then place of supply. So, this place of supply is also an aspect, so which will be generally given in the question itself. They will give in the question itself what is the place of supply. In the absence of information in the question, 95% they will give. But I have seen one or two questions in the past wherein they did not specify the place of supply in question. In that case, what you need to do, if it is goods, you take ending point as a place of supply. If it is services, what you will take as a place of supply? Location of recipient as a place of supply. Is it clear or not? So, question itself they will specify what is the place of supply. If that is not given in the question, what you should do? In case of goods, come on, ending point. In case of services, location of recipient will be taken. So, if the location of supplier and place of supply is in the same state or same union territory, same state or same union territory, what is it known as? Intrastate. Okay. And in case if it is same state, the taxes will be CGST plus SGST. What is the full form of CGST? Central Goods and Services Tax. SGST full form is what? State Goods and Services Tax. Whenever it is in the same state, whenever it is in the same union territory, what are the taxes that we have? CGST common, and therefore here it is UT na. As it is UT, we call it as UTGST. Here it is state, so we call it as SGST. Okay, that's the difference. So therefore, this is the dual tax model that we have in case of intrastate supply. What is this nature of supply known as? Intra or inter? Intrastate supply. So in case of intrastate supply, what is the combination of taxes that we will be having? CGST plus SGST, CGST plus UTGST. Now, so what are the various union territories that we have where UTGST Act will be applicable? So total 5 union territories we have here for which UTGST Act will be applicable. What are those 5 union territories? We have, come on, Andaman and Nicobar, then Andaman, then Lakshadweep, then Dadra, Nagar Haveli, Daman and Diu. So this is actually one union territory only. And then next we have Ladakh and Chandigarh. So these are the 5 union territories that we have. For these 5 union territories, what is the type of GST that is applicable? UTGST. But there are some union territories with state legislature. So they should be treated like a state only. What are the states that we have? So we have 28 states. We have 28 states. Tamil Nadu, Andhra Pradesh, Madhya Pradesh, like that list of states. And 3 union territories which should also be treated like state. What are those 3 union territories? Delhi, Puducherry, Pondicherry and Jammu and Kashmir. These 3 are actually union territories, but they have been given partial statehood, which means they will be treated like state. So therefore, what is the type of GST that will be applicable there? UTGST or SGST? SGST. And these are the 5 union territories where UTGST applicable, and for 28 states plus 3 union territories with state legislature, therefore 31, we will have 31 SGST acts. And these 5 union territories together, we will be having one UT GST Act only, because all these are under whose control? Central government control only, na. So therefore, for these 5 union territories put together, we have one UT GST Act, because it is under the control of central government. And we have 31 SGST Act, because we have 31 states, 28 states plus 3 union territories, and CGST plus SGST in case of intrastate within the state, CGST plus UTGST in case of intrastate within the union territory. So that is with respect to this. Then both cases CGST common. So therefore, how many CGST acts we will have? One CGST act only, because there is only one central government. So we will have one CGST act. We have one CGST act, 31 SGST acts, and one UTGST act. All these are connected to intrastate supply. Then what is the next thing that we have? We have interstate supply. What is the difference between intrastate and interstate? From this itself easily you can identify. If location of supplier and place of supply, same state, same union territory, intra. So two different states, two different union territories, a state and a union territory is known as inter. You understood or not? So come on, tell me location of supplier and place of supply. So location of supplier. Again here location of supplier and place of supply, same way you need to identify in the question. And place of supply in case of not given in the question, what you will do? Ending point in case of goods, and recipient location in case of services. If location of supplier and place of supply is in two different states or two different union territories, or a state and a union territory, it is known as what? Interstate supply. In case of interstate supply, what is the type of GST that we will be having? IGST, Integrated Goods and Services Tax, not Interstate Goods and Services Tax. IGST full form is what? Integrated Goods and Services Tax. This IGST is levied by whom? Who will be levying it? Central government. But in case of IGST, there is single tax model. So far we have been seeing dual tax model, CGST plus SGST, CGST plus UTGST. But in this case, there is only single tax model. That is not correct, because India follows what model? Dual GST model. So in this IGST, what will happen? So this IGST, 50% will go to the central government, remaining 50% will go to whom? Remaining 50% will go to the consuming state based on place of supply. Okay. For example, let's take here, if the location of supplier is Tamil Nadu and if the place of supply is Karnataka, what will be the type of supply? Interstate supply. In this interstate supply, IGST levied. This IGST collected by Tamil Nadu or Karnataka? Neither Tamil Nadu nor Karnataka. It is collected by central government. 50% retained by central government. Remaining 50% will be given to consuming state based on place of supply. What is the consuming state here based on place of supply? Karnataka is the consuming state based on place of supply. So it will be given to them. Then who will be at loss? Producing state is at loss. How producing state? Who is the producing state here? Tamil Nadu is the producing state. Who is the consuming state? Karnataka is the consuming state. Means whatever goods that are produced in Tamil Nadu is being consumed in Karnataka. So which means that when IGST levied, in this IGST 50% will go to 50% will go to CG. So CG happy, very, very happy. Then remaining 50% will go to whom? Karnataka. So Karnataka happy, double happy. Then Tamil Nadu will not get anything. So therefore, Tamil Nadu state is at loss. The producing states is at loss. And because of this, there will be loss of revenue to the government. Which government? State government. That to which state government? Producing state governments. For compensating this loss of indirect tax revenue, central government will be levying some new tax called as compensation cess. You understood or not? Sir, in case of IGST, 50% will go to central government, remaining 50% will go to Karnataka, and the producing state is at loss. Because of compensating that loss of revenue to the producing state, so there will be some revenue which will be given by whom to whom? By central government to producing state. But will the central government pay out of their pocket? Definitely no. So they will be in turn levying it on us only. What is the name of that? Called as GST compensation cess. Okay. So this GST compensation cess is something which is levied on all goods or on notified goods? Notified goods, not on all goods. So now this is the fifth one we are discussing. First we saw CGST levied by central government on intrastate supply, correct or not? Then second is GST levied by state government on intrastate again. Then UTGST levied by central government on intrastate. On intrastate there are three taxes. What are the three taxes? CGST, SGST, UTGST. Then IGST. IGST levied by central government on interstate supply. Now what we are discussing, fifth one, GST compensation cess. But this is not called as tax, this is called as cess, because this amount collected is used for a particular purpose. So what is that particular purpose? To compensate the states. That is the difference between tax and cess. If you collect the money and use it for any purpose, for Vande Bharat train, or for construction of bridge, or for construction of statue, so any purpose you can use. Whereas cess should be collected and used for the particular purpose. That is the difference between tax and cess. So that's why it is called as cess. And this fifth one, that is GST compensation cess, is collected on what type of goods? All goods or notified goods? And in case of this notified goods or services, notified goods or services, GST compensation cess is levied. Is it levied on interstate sales, or interstate supplies, or intrastate supplies, or both? Both. So it is not only on interstate, it is on both intrastate or interstate. Who will levy this GST compensation cess? Central government. And is it on all goods or on notified goods? Notified goods. It is not on all goods, it is on notified goods. And intra or inter, therefore once a product is sold within the state or from any state to any state, central government is going to collect the GST compensation cess. And this compensation cess collected, what they will do? Will they retain it? No. Will be given to whom? Will be given to states. Will be given to which states? So states having loss of revenue, loss of revenue due to what? Due to implementation of GST, due to implementation of GST. And this is levied up to which date? So now there is an amendment. It is levied up to which date? GST compensation cess is levied up to which date? A very, very important for MCQ, 31st March 2026. That is the date up to which GST compensation cess is levied. Okay. So this is about compensation cess. This much you need to remember. So what are the points you need to remember here? GST compensation cess levied by central government. It is on notified goods or services, and it is on intrastate supply or interstate supply, and whatever money that is collected by way of GST compensation cess will be given to states that is having loss on account of implementation of GST, and it is levied up to which date? 31st March 2026. So these key points you remember. If at all you get a theory question also, combining these you can write, or in short like MCQs also it will be useful for you. So this is about the various types of GSTs that we have. So here I have given it to you. Intrastate supply means what? So if the location of supplier and place of supply in the same state or same union territory. Interstate supply means what? Location of supplier and place of supply, two different states, two different union territories, a state and a union territory. In case of intra, what is the type of GST? CGST plus SGST. And CGST plus UTGST. In case of interstate, IGST, 50% is shared with which state? Consuming state based on place of supply. In addition to this, we have GST compensation cess, and it is levied to compensate the loss incurred by states on implementation of GST. We discussed now, already it is there. That's why I have not asked you to write anything, okay? Then it shall be levied for how many years? 5 years. But now that 5 years is over. So therefore you don't have to remember that. Instead you remember what is the end date up to which it will be levied. That is up to 31st March 2026, okay? Then now let's see what are the situations here. Don't look into your book for some time. So just participate here, look into the screen, hope it is visible to all of you. So, or you listen, if location of supplier is Tamil Nadu and place of supply also Tamil Nadu, what is the nature of supply? Intrastate supply. What is the types of GSTs that we have? CGST, SGST. SGST levied by which state government? Tamil Nadu state government. Then next, location of supplier Tamil Nadu, place of supply Karnataka, nature of supply interstate supply. So levied, what GST is levied? IGST, levied by 50% shared with state government of Karnataka. Then next, location of supplier Jammu and Kashmir, place of supply Ladakh. So intra or inter? Inter. Even though Jammu and Kashmir and Ladakh geographically is in one state, but now it is no more a state. It is divided into 2 union territories. So Jammu and Kashmir is one union territory, Ladakh is one union territory. So any transaction that plays between J&K and Ladakh will be coming under interstate supply. Okay. So therefore it is interstate supply. What is the type of GST? IGST. Will there be any 50% sharing? No. Why there won't be any 50% sharing? What is the place of supply? Ladakh. Ladakh is under whose control? Central government. So why they will be giving 50% to anyone? You understood or not? So only if the place of supply is a state or a union territory with state legislature. What is union territory with state legislature? Delhi, Puducherry, Jammu and Kashmir. Then only we need to talk about that 50% point. You understood or not? Suppose if the place of supply is a union territory without state legislature, that is, that 5 union territories we saw, na, Ladakh, then Chandigarh, Daman, Diu, Dadra, Nagar Haveli, Andaman and Nicobar, Lakshadweep, then in that case, no 50% sharing. Full IGST will go to central government. Then next situation you see, location of supplier Ladakh, place of supply Jammu and Kashmir, nature of supply, interstate supply, okay, tax, IGST, good, and who will be taking that IGST? Central government 50% and remaining 50% will be given to Jammu and Kashmir. Why? Even though Jammu and Kashmir is a union territory, but that's a union territory with state legislature, so we need to treat it like state. Okay. Then next, location of supplier Ladakh and place of supply also Ladakh. Nature of supply intrastate. Type of GST CGST and SGST or UTGST? UTGST, because Ladakh is a union territory without state legislature. So union territory GST will be applicable. Okay. Then location of supplier Jammu and Kashmir, place of supply Jammu and Kashmir. Nature of supply intra. Type of GST CGST plus SGST. So because Jammu and Kashmir is a union territory with state legislature, so it should be treated like state. Then location of supplier Tamil Nadu and place of supply Puducherry. Nature of supply intra or inter? Inter, because Tamil Nadu and Puducherry are treated as one state and a union territory. So therefore it will be so inter. Interstate, what is the type of GST that is leviable? IGST. Will there be 50% sharing or 100% retained by central government? 50% sharing. 50% sharing to Puducherry. Why? Because Puducherry is a union territory with state legislature treated like a state. Okay. So that is with respect to this. Then you can see the legislative framework here. In this legislative framework, already those points I have discussed, how many acts we have, etc. and all. So this we completed. Now, what are the union territories also we have seen. In this, one important point you should know, what is the meaning of India? India is up to 200 nautical miles from the baseline. So if the transaction takes place up to 200 nautical miles from the baseline, GST will be applicable. So it is called as supply in India. suppose if the transaction takes place beyond 200 nautical miles from baseline, then it will be known as supply outside India. What is the meaning of nautical mile? 1 nautical mile. Usually the distance in sea is measured using nautical miles. 1 nautical mile is 1.8532 kilometers. So approximately 2 kilometers, okay, is 1 nautical mile. And up to 200 nautical miles is known as what? India. Okay, up to 200 nautical miles is India. Beyond 200 nautical miles is known as outside India. Now see this. You can make note if you want. So this is actually India, South India, okay. Assume, visualize that way. So in this India, we will have a baseline, correct? Baseline means what? Seashore. Baseline means seashore. From the baseline up to 200 nautical miles, is known as India. Up to 200 nautical miles is known as, actually there is a name for this called as exclusive economic zone. Exclusive economic zone. And India is up to this. India extends up to this. So this landmass plus up to this will be called as India. Now sir, within this if there is an island, will that also be India? Don't say that way. Then Sri Lanka is within this 200 nautical miles. We cannot take Sri Lanka as India, na? Within this if there is any island not occupied by any other country, then it will be part of India. That's where Andaman, Nicobar, Lakshadweep not occupied by anyone. So it will become India. Maybe tomorrow if someone want to occupy that, can they occupy? Yes, they can occupy. They can, nothing wrong in that. They can wage a war and they can occupy. They have to win over India and then only they will be able to occupy. Okay. So if they occupy, it is theirs. Otherwise it is ours. Same way, we can also occupy any other country like that within this 200 nautical miles, and therefore that will become India. But right now, so we have only Andaman, Nicobar, Lakshadweep as island. Remaining waters and all will be coming under India. Beyond 200 nautical miles is known as what? International waters. This word international waters you might be knowing, because when people steal any amount and all, if they go to international waters, Indian police cannot touch them, etc. and all. So in one movie, so hero Ajit would have traveled, looted lot of bank money and would have went to international waters so that police cannot catch him, like that. So many good examples we have from movies. So therefore this is international waters. So this international waters, will it be coming under India or outside India? Outside India. And now see here, if there is a person, that is supply, place of supply, location of supplier is also in the land. Place of supply is also in the land. So this will be supply in India. You understood or not? Even if the location of supplier, place of supply is in this place, that will also be called as supply in India. You understood? So these both are called as supply in India. Suppose if the location of supplier is here and the place of supply is in this international waters, that is called as supply outside India. So this will be called as supply outside India. Up to that it will be called as supply in India. Supply in India. Now sir, in waters what kind of supply we will be making? There will be one ship inside the water, and that is on the waters there will be a ship. To that ship we may be providing some repair services, etc. So for that discussion it will be relevant. Okay. So up to 200 nautical miles, if the transaction takes place, that will be called as supply in India. If it is beyond 200 nautical miles, it is supply outside India. Supply outside India means that will qualify for export of services. So the supply outside India will be called as what? Export of goods or services. Whereas this supply within India, unless exempted, it will become taxable. Okay, that is up to this. Then this point also can be tested in exam, because this is not yet tested so far in the exam. So this point also can be tested. So India is up to 200 nautical miles from baseline. Then next, what are the goods which are not at all covered under the levy of GST? There are two goods which will never be covered under GST at present. What are they? Alcoholic liquor for human consumption and petroleum products. These two are not covered under the ambit of GST. And this alcoholic liquor, is there any possibility that future it will come into GST? No. And what about petroleum products? It may come into the GST in future? Yes, because this exclusion is only temporary, but alcoholic liquor exclusion is permanent. And until that point of time, what are the duties that we have on this alcoholic liquor for human consumption and petroleum products? So we have on manufacture, state excise duty in case of alcohol and central excise duty in case of petroleum products. Then on sale, we have CST and VAT. Okay, you remember this way. So what are non-taxable supplies under GST? Two: alcoholic liquor for human consumption and petroleum products. Then on those non-taxable supplies, there is no GST, but there is existing indirect taxes. What are the existing indirect taxes? On manufacture of alcohol, state excise duty; petrol, central excise duty; and on sale, CST and VAT. Okay, that will be applicable. Now, what are the petroleum products which are outside the ambit of GST here? Crude oil, petrol, diesel, aviation turbine fuel, and natural gas. These are the five. So sometimes they say motor spirit in the exam question. What is motor spirit? Nothing but petrol. And which diesel is actually petroleum product here? High speed diesel. Suppose if it is normal diesel, light diesel, will it be coming under exclusion? No. So be careful. So high speed diesel. And then motor spirit. Motor spirit is commonly known as petrol. So what are the five petroleum products? Come on. Crude oil, high speed diesel, petrol, natural gas, aviation turbine fuel. Then on tobacco products, we have GST. Okay. But we also have old indirect taxes. On tobacco products, we have GST as well as old indirect taxes, central excise duty. And on other goods, we have only GST. We don't have anything else. So this is what you need to remember. So now, what is the speciality of tobacco products? We have old indirect taxes, central excise duty, as well as new indirect taxes, that is GST. Now you may get a question, MCQ, which of the following attracts central excise duty? Okay, which of the following attracts central excise duty? Now, what are the products on which central excise duty is applicable? Central excise duty. Petroleum products, tobacco products. Very good. Not state, like state excise duty is only on alcohol. So alcohol it will not come. And what are the products on which state excise duty applicable? Only one. What is that? Alcohol. Whether GST and VAT, CST and VAT is applicable on tobacco products? No. Because on tobacco, check the table. On tobacco products, there is no CST and VAT. Then CST and VAT is applicable on what goods? Alcohol and petroleum products. Is it clear? And then here, what about kerosene oil? Is it a petroleum product? Kerosene oil, is it in the list? Kerosene oil? No. So GST applicable or not? Yes. LPG, liquefied petroleum gas, is it a petroleum product? No. It's not there. Gas is there. Natural gas is different from LPG. So on LPG there will be GST, but on natural gas there is no GST. Kerosene oil also no GST. Engine oil, lubricating oil, etc. Tutti oil, whether GST will be applicable? Yes, because that is not a petroleum product. Are you understanding this? Then light diesel oil, not high speed diesel oil, light diesel oil. Whether GST applicable? Yes. Only high speed diesel oil, GST is not applicable. Are you with me? Then what about cooking wine? Whether GST applicable? Yes, because cooking wine is not alcoholic liquor for human consumption. Then what about cough syrup containing alcohol? GST applicable? Yes, because that cough syrup contains an alcohol which is not for human consumption. Like that industry grade alcohol is there. Industry alcohol called as ethanol. Ethanol, like that they call industry alcohol. Whether on that GST will be applicable? Yes. So only on alcoholic liquor for human consumption and petroleum products, that to 5 petroleum products, GST is not applicable. That is this. Then What about services? Whether all services are covered under the ambit of GST? Yes, of course. All services are covered under ambit of GST. Few are taxable and few are exempted. Now, whenever in exam you see or you come across any transaction. So actually in exam, this is what we will be doing. Like we see a transaction in the question. For the transaction, we need to analyze many things. First, we need to analyze whether the transaction is supply or not a supply. Then we need to analyze whether it will become taxable or exempted. Then we need to see if taxable, who will be paying GST. That's the third aspect. And after who is liable to pay GST, we have the fourth aspect, that is, are they registered or not. So then only the payment of GST shall arise. So what are the 4 points that we need to check in every transaction? Come on. First, you need to check whether a transaction is supply or not a supply. Second, we need to check taxable or exempted. Third, you need to check is it FCM or RCM. What is the meaning of taxable or exempted? Taxable means we will pay GST. Exempted means we will not pay GST. That is simple. What is FCM, RCM? FCM full form? Forward charge mechanism. RCM full form? Reverse charge mechanism. What is the meaning of RCM? Meaning, if the recipient is having liability to pay GST to government, it is known as RCM. If the supplier is having liability to pay GST to government, it is known as FCM. For example, so I am supplier, you are recipient. I make a supply to you. Now in this case, if I pay GST to government, it is known as what charge? FCM, forward charge. If you are required to pay GST to government, it is known as what charge? Reverse charge. Okay. But ultimately, burden will be on whom? Whether supplier pay GST to government or recipient pay GST to government, this is what tax? Indirect tax. In indirect tax, what will happen? The burden will be ultimately on the consumer. So I will pay, in turn recover it from you. You pay out of your pocket. So burden is on you only. So always the recipient will have the burden here. But who is having liability to pay is what we are discussing, that is FCM and RCM. Then we have the next aspect, that is registration. So registration, even though the service is taxable, if a person is not registered, he is not required to pay GST. Are you understanding? This point also we need to check in question. We miss that. We see service, taxable, add liability. But actually first they should be registered now. If they are not registered, where from they will be paying GST. So therefore, the fourth aspect also we need to check, that is whether they are registered or not. Now, we are going to learn one flow chart. That flow chart is very much useful for this first question. Even nowadays, the second question also they are asking like this only on exemptions. So usually question number 1, 8 marks. Question number 2 also for 5 marks they are making a question like this for the last 2 attempts. So May 23 paper I saw, November 22 paper also. First question 8 marks question, second question also 5 marks question, ditto like this, like 8 marks question only. They are giving transactions and on that they are asking whether taxable or exempted, how much is the liability, like that they are asking. Okay. So therefore, if you ask me 2 chapters, if you are thorough, 3 chapters. If you are thorough, 50% of the portion is over. What are those 3 chapters? You know, input tax credit, exemptions and value of supply. These 3 chapters, if you are thorough with, then 50%, that is 20 marks is in your pocket. Only 3 chapters you should be focusing on. What are the 3 chapters? Input tax credit, exemptions and then value of supply. Now, what is the flow chart? Kindly make note in your notebook. So please keep aside all your books. So just write down, it will take some 15 minutes. So what is the first thing that you need to check in a question? The moment you see the transaction or the activity, check whether that activity or transaction is supply or not a supply. Okay. For that, activity or transaction is supply. Whether an activity or a transaction is supply or not a supply, we need to check. How to check? We need to refer to one section. What is the section that we need to refer? Section 7. Section 7 of CGST Act you need to refer to know whether an activity or a transaction is supply. Suppose if the activity or a transaction is not a supply, then what is your answer? Whether GST payable or GST not payable? GST not payable. But what is the reason that you will write? What is the reason you will write? Not a supply, as the said activity is not a supply, consequently GST not payable. Like that you will write as the justification. In every question for answer we need to write the notes, justification we need to write, but what to write as justification we need to know. That's why I am giving you this. Okay, then next, suppose if the activity or a transaction is supply, then what is the next aspect you need to see? Is it supply of goods or supply of services? You need to check. Okay, so therefore the classification, once the activity becomes supply, we will divide it into two: supply of goods or supply of services. How do we know whether it is supply of goods or supply of services? We need to refer to section 7 subsection 1 capital A read with schedule 2. So we have one subsection, there you will know what transactions are goods and what transactions are services. So section 7 subsection 1 capital A read with schedule 2. Whatever sections that I am writing here, at least those sections and notifications you try to remember. These are like important areas. Okay, then so once you know that it is supply of goods or supply of services, the next aspect is it taxable or exempted. Okay, so the activity becomes supply, so now we know whether it is goods or services. The next aspect is whether it is exempted or not. You need to see, because exempted is only defined, so the remaining balancing figure is what? Taxable. Whether such supply is exempted. Whether such supply is exempted. How do you know whether it is exempted or not? If it is goods here, it will be given in the question itself. If it is goods, it will be given in the question. If it is services, we need to remember, we need to know. What is that? We have one notification number, that is notification number. What is the notification number? Anyone? 12 of 2017. That 12 of 2017 contains some list of services which are covered under exemption. We don't have to pay GST on that. That list you need to remember. So whether such supply is exempted. If the answer is yes, then GST payable or GST not payable? GST not payable. So therefore it will be connected to this. If the answer is yes, GST not payable. Okay, now what is the reasoning that you will write? The said activity even though becomes supply under section 7, but it is covered under notification 12/2017, therefore it is exempted. You understood? That is a justification you need to write, because you don't know in exam what to write. You know it is taxable, you know it is exempted, but what to write there? Even though the said activity is supply under 7, but the said activity is covered under exemption notification number 12/2017, therefore it is exempted. Like that we should write. Then next, suppose if it is no, whether the activity is exempted, no, means what? What is the balancing figure? Taxable. So said supply is taxable. Supply is taxable. Then what is the next aspect that we need to check? The next aspect that we need to see, is this supply which is taxable, who is liable to pay GST? So what is defined in law? RCM defined. So recipient liable to pay GST, we have listed. So balancing figure is what? Supplier will be liable to pay GST. So the next aspect, whether the said taxable supply, whether the said taxable supply covered under RCM, covered under RCM. How do we know whether it is covered under RCM or not? What is the full form for RCM here? Reverse charge mechanism. If you don't know, you write there. Otherwise, you just write RCM. How do we know whether the goods are covered under RCM? We will not know. That will be given in the question. Because the goods which are covered under RCM related provisions are not there for exam. So in question itself, it will be given. Like how exemptions for goods is given, for this also it will be given. If it is not given, goods is there, concentrate, very, very important point. Goods is given, but they have not given exemption. So, taxable, super. And they have not given it is RCM. So, FCM. You understood or not? So, like whenever you see a goods related provision, goods related transaction, check whether they gave it as exempted. No, which means it will be taxable. Same way, check whether it is given as RCM. If it is not given, it will be FCM. Then, in case of services, how do we know whether it is covered under RCM or not? There is one notification you need to refer to. What is it? Notification number 13 of 2017 contains a list of services which are under RCM. Suppose if it is yes, whether the said taxable supply is covered under RCM, yes, then who will pay GST? Recipient shall pay GST. Suppose if it is no, then supplier will pay GST, simple. But someone will pay GST, reason being, both cases it is first of all taxable, na, that's why. Suppose if it is no, yes, no. If it is yes, recipient, liability to pay GST is on recipient. Liability to pay GST to whom? Government is on recipient. Suppose if it is not covered under RCM, then liability to pay GST to government, is on supplier. Then, whenever supplier is liable to pay GST, you need to check whether that supplier is registered or not. Actually, three aspects we completed. First aspect, we saw whether the activity is supply or not. Then we saw whether it is taxable or exempted. Then we saw is it FCM or RCM. The moment the transaction is taxable under RCM or FCM, as the case may be, so liability to pay GST is on whom? Liability to pay GST either on the supplier or on the recipient. Suppose if the liability to pay GST to government is on the supplier, you need to check whether they are registered or not registered. How do we know whether they are registered or not? It will be given in the question, or we need to check whether their aggregate turnover exceeds threshold limit. So every person will have a threshold limit for registration. What is the threshold limit for registration? In some cases it will be 10 lakhs, in some cases it will be 20 lakhs, in some cases it will be 40 lakhs. So whenever that aggregate turnover exceeds the threshold limit, they are required to get registered. Okay. So here the next aspect that you need to check is that whether the supplier is registered. So up to this we have seen liability to pay GST to government is on supplier. Whether supplier is registered. Whether supplier is registered or liable to be registered. Registered or liable to be registered. Liable to be registered. How do we know whether the supplier is registered or liable to be registered? So section 22 and 24. There are some people who are required to get registered only when their aggregate turnover exceeds that limit, what I told you, 10 lakhs, 20 lakhs, 40 lakhs. But some people are compulsorily required to get registered irrespective of the threshold limit. Whatever may be the turnover, they are compulsorily required to get registered. So therefore, we need to refer to section 22 or section 24. Then we will know whether they are required to register or not. And suppose if the supplier is registered or liable to be registered, if the answer is yes, then GST payable or GST not payable? GST payable. GST payable. If the answer is no, even though the transaction is taxable, even though liability to pay is on supplier, but as a supplier is unregistered, GST is not payable. Like that we need to write. Okay. So if the registration is no, GST not payable. So tell me what are the cases where GST not payable? Number one, if the activity is not a supply, you check the flow chart. If the activity is not a supply. Number two, if the activity is supply but it is exempted. Number three, if the activity is supply and it is taxable and it is FCM but the supplier is not registered or unregistered. Okay. Then next. Now we are looking into recipient. Liability to pay GST is on recipient. Actually, we have one point. Whenever recipient is liable to pay GST, they are compulsorily required to get registered. It is given in section 24. One point says, if you are a recipient, you are liable to pay GST under RCM. You are compulsorily required to get registered irrespective of the threshold limit. Okay. However, if you are exempted from registration, you are not at all required to register. So section 23 talks about exemption from registration. So there are few people who are exempted from registration. Who are they? A person who is making only exempted supplies. Example, if you take a fruits and vegetable vendor. Fruits and vegetable vendor actually is making only exempted supply because fruits and vegetables are exempted. If you go to this Coimbatore market, so lot of wholesalers you will be seeing who is engaged in sale of fruits and vegetables. Their turnover will be like 80 lakhs, 1 crore, 2 crores and all they will be making as turnover. You understood? But are they required to register or not required to register? Not required to register. Why they are not required to register? Because they are making only exempted supplies. This is one side. Other side, if you see, these fruits and vegetable vendors will receive GTA services, Goods Transport Agency services. On Goods Transport Agency services, we have RCM liability, means the transporter will not pay, but the recipient, consignor or consignee will pay the GST under RCM. Are you understanding this? Now that fruits and vegetables vendor, his outward supply will be exempted, but he has some inward supplies na. On that inward supplies, he need to pay GST under RCM. On one hand, he is compulsorily required to register. Are you understanding this? On the other hand, section 23 says he is exempted from registration. So which section will override? Section 23 overrides section 24. If a person is exempted from registration, they are exempted from registration. Even though as per some other section, they may be compulsorily required to register, they are not required to register and pay. Is it clear? So just because it is RCM, so don't conclude that always GST payable, they are compulsorily required to register. Now we have to check one more point. What is that? Are they covered under exemption from registration? Okay. So therefore, liability to pay GST is on recipient. What is that you need to check? Come on. Whether recipient is exempted from registration. Whether recipient is exempted from registration. How do you know whether they are exempted from registration or not? You need to refer to one section. What is that section that you need to refer? Section 23. Whether recipient is exempted from registration. If the answer is yes, they are exempted from registration. GST payable or GST not payable? GST not payable. Suppose if they are not exempted from registration, GST payable. Why? Because they are compulsorily required to get registered. Okay. So therefore, only two cases here. If they are exempted from registration, GST not payable. If they are not exempted from registration, definitely GST payable, because as per section 24, they are compulsorily required to get registered. Compulsory registration. Compulsory registration. Now you tell me what are the 4 cases where a person is not required to pay GST. Means whenever GST not payable in any of these 4 cases, the answer will be, okay. So what is that? Number 1, if the said activity or transaction is not a supply. Number 2, if the activity is supply but it is exempted. Then number 3, the activity is taxable but the person who is paying GST, that is supplier, is unregistered. Okay. Then number 4, the activity is taxable but recipient is liable to pay GST and recipient is engaged in exempted supplies. So they are exempted from registration, GST not payable. Is it clear? So in these 4 answers only, any one answer you will be writing in exam for GST not payable. Okay. So you need to know as to what justification you need to give. So that's why I have given this. Also, in which way we need to interpret also, you see this flow chart. This flow chart is useful now for 8 plus 5, that is 13 marks question you will be having. First question 8 marks, second question 5 marks, there you will be applying it. Got it? Yes? Now, here we have certain points that we will be going to learn in the future portions, like section 7 is what, classification is what is notification 12 2017, what is notification 13 2017, then section 22, 23 and 24, all this we will be learning in future. Now, why I told you this? Because all services are covered under levy. Few services are exempted and remaining services are taxable, okay, for that portion. Now we are looking into the next aspect, that is input tax credit. What is the meaning of input tax credit? So under GST. So this input tax credit is really a benefit which is given to a taxpayer in GST. I am just giving you one example. No need to make note, just listen. There is one trader and this trader is having some purchases. This trader is having some purchases and on that purchases he will pay some price plus GST. What could be that price? Say he paid 10,000 rupees plus GST of 12%, that is 1,200. Then this trader is making some sales. On that sales, this trader is getting some money. How much is that? Let's take 15,000 plus GST of 12%. Now, in this case, every person will have purchase and sales. So now this purchases, I will replace with a new word called as inward supplies. Because purchase is a word used in the context of what? Goods. Services we will not call as purchases. So commonly we call with a word inward supplies. Same way, sales also we will replace with a word outward supplies. Okay, outward supplies, so that it will be common between goods and services. Now this trader makes some inward supplies, on that he pay some price plus GST. This GST is known as input tax. This GST paid on inward supply is known as what? This GST is something he pays. How much is the GST that he pays? 10,000, 12% is 1,200. What is the name of this 1,200? Input tax. Input tax. Then again, so tax on inward supply is input tax. Same way, what is the tax on outward supply? Output tax. So this 15,000 plus GST 1,800. So this 1,800 is known as output tax. Okay. Now, how much the trader has to pay to government? Output tax minus input tax is the net tax that he paid to government. Got it? How much he need to pay to government? How much is the tax liability that he has? He need to pay to government. Input tax, output tax minus input tax. What is output tax? 1,800 minus what is input tax? 1,200. So what is the balance? 600 he need to pay to government. Now this is how the input tax credit is adjusted. Okay. So what happens here? The tax paid on inward supply. Concentrate in this example. The tax paid on inward supply. What we are doing with the tax paid on inward supply? Adjusted against tax payable on outward supply. Understood or not? tax paid on inward supply adjusted against the tax payable on outward supply. But are we going to adjust immediately? Not necessary. We can keep it and adjust it in future also. Not necessary that you need to adjust now itself. So that's why we call it as credit. You keep it and you adjust with your liability. So it is called as credit. So it is input tax credit. Input tax means what? Tax paid on inward supply taken as credit and adjusted against tax payable on outward supply. Which tax? GST. So GST paid on inward supply taken as credit and adjusted against tax payable on outward supply. This taken as credit will be called as availment of ITC, because see, like learning, we can learn it in any language. So any words we can use. But when you are writing in the exam, you have to write the legal terminologies only. Then only you will get full marks. That's why. So GST paid on inward supply availed as input tax credit and utilized, that adjusted will be called as utilized against the GST payable on outward supplies. Okay. So now come on, tell me what is the meaning of input tax credit? GST paid on inward supply availed as ITC and utilized for payment of GST on outward supply. What is the meaning of availed as ITC? Taking credit. What is the meaning of utilization of ITC? Adjusting the credit. Where we take credit and adjust credit? In one return. What is that return? GSTR 3B. What is the full form of GSTR? GST return. I told you return. GST return. So what is the return form number? GSTR 3B. In that GSTR 3B, we will avail ITC and we will set off with the liability. Both things we do in this 3B only. Got it? Now, here, what is the logic behind this input tax credit? Simple. So we collect 1,800 rupees from the customer and already at the time of purchase we paid 1,200. Now you recover that. Remaining amount you pay to government. Is it clear? How much I got from my customer? 1,800. In that 1,800 already I paid at the time of purchase how much? 1,200. Still what is left with me? 600. That I paid to the government. That is the logic behind it. Now what my customer will do? This 1,800 he will take as credit and he will have some liability in future. With that liability he will set off. Like that it will keep on going. So effectively every person will pay GST on what? On their value addition. What is the value addition made by this trader? How much he purchased for? 10,000. For what price he is selling? 15,000. What is the value addition that he makes? 5,000. 5,000 into 12% is what? 600. So that's why GST is also called as value added tax. You understood? Because we are literally computing tax on the value addition. What is the other name for GST? Value added tax. Suppose if you get a question, GST is a value added tax, justify the statement. Like that you may get a question for 4 marks. What will you write? Literally the answer that you need to write is input tax credit. You need to write about the concept of input tax credit, and under input tax credit we pay net GST only on the value addition. As we pay tax on value addition, GST is called as a value added tax, like that. The problem is for which question what answer to be written is what we need to know, because in exam there won't be anyone to help us. You understood? And after exam hall when we come on, so we will ask, what is that we need to write for this? They will say, this only we have to write. I know this. Had I known this in the exam hall, I would have written. You understood? So that's why I am giving you all these points as to these keywords, because directly if they ask why it will be called as CA Institute. You understood? Directly, if everything so easily if they ask, it is not called as ICI. You understood? Generally, there is a difference between a person who is good and a sadist. You understood or not? Like that ICI come into the other category called as sadist, and they exploit that sadism in the exam paper, and they will not give directly. They can ask, explain about input tax credit. Everyone will write, everyone will get marks. No. So GST is a value added tax, justify, like that they will ask. So we will think we don't know out of syllabus, and we will come out and then we will know the reality. Okay. So therefore this is about that. Now, sir, on import also we have to pay IGST. Why? Because In the past, there used to be CVD and SAD, countervailing duty and special additional duty, and that got subsumed into GST. So this CVD and SAD was part of what? Customs duty. As this got subsumed in GST, on import we pay IGST. Even IGST paid on import also we can take as ITC, but other customs duties that we pay, that we cannot avail as ITC. Then next, these 3 points you need to keep in mind. What is that? If outward supplies are taxable, you can take ITC on inward supplies. What does it mean? I purchase a product, I make sale of that product. Sales is taxable. On purchase, whatever GST paid, I can take as credit. Simple. If outward supplies are exempted, ITC not available on inward supplies. What does it mean? Sir, if my sales is exempted, on my purchase I am paying some tax na. For example, say this. If this sales is exempted, this 15,000 is exempted, am I going to pay any GST? No, as I am not going to pay any GST, this GST paid on inward supply I cannot take as ITC. If I take as ITC also, what can I do? I cannot do anything with respect to that na. You understood? That's the reason why what they are telling. If you pay GST on outward supply, take the ITC on inward supply. If your outward supply is exempted, don't take ITC on inward supply. Okay? Then, what if outward supply is non-taxable? Same. If the outward supply is non-taxable also, don't take ITC on inward supply. So, if non-taxable are exempt, let's see this, exempted, so exempted also will be treated as, like non-taxable, exempted, both in the same category. You understood these 2 points? What are the 2 points? If outward supply is taxable, can we take ITC on inward supply? Yes. If outward supply is exempted, can we take ITC on inward supply? No. But if the outward supply is zero rated, can we take ITC on inward supply? Yes. What is the meaning of zero rated? Rate is zero is not zero rated. If the rate of GST is zero, we will not call it as zero rated. Then what is zero rated? The burden of GST will become zero, then only it will be called as zero rated. When the burden of GST will become zero? Only in 2 cases. Exports and supplies to SEZ is known as zero rated. You can see below. What are considered as zero rated supplies under GST? Export of goods or services, supply of goods or services to SEZ is known as zero rated supplies. In case of zero rated supplies, the burden of GST will become zero. So therefore, it is treated as zero rated supplies. Okay. And so whether we pay tax or not, yes, we pay tax, but we get the refund of the tax. I will first pay tax, I get the refund of that. Then the burden will become zero na. That's why it is zero rated. Tell me what are zero rated supplies in GST? Export of goods or services, supply of goods or services to SEZ. Now, when my outward supply is zero rated, I pay tax, I get the refund of that tax. Even then, can I enjoy ITC on my inward supplies? Yes, that is the advantage. ITC available with respect to inward supply. Then what I can do with that ITC, sir? My outward supply is zero rated, means I pay tax, I get the refund of that, which means the burden will become zero. On inward supply, I have paid some tax which I took as ITC. What I can do with that ITC? I will have some liability, some other transactions will be there. For that some other transactions, I can set off, okay, or I will even get it as a refund. So you can see what are the options available in case of zero rated supplies. So see the next page, page number 16. So on outward supplies, option 1, you pay the GST. This is the first option I told you. First I will pay GST and I will get the refund of the GST. You understood? While paying this GST, I can use my input tax credit and I will get the refund with respect to that. Option 2, I will not pay any GST. I will not pay any GST. But on my purchases, I have already paid some GST now, which I took as input tax credit. That I will get as a refund. So ultimately, my burden will become zero. Simple here. On sales, I am paying like I have a liability 8 lakhs. On purchases, I have a credit 3 lakhs. So how much I will pay to government? 5 lakhs. How 5 lakhs? 8 minus 3. Just now I told you the net tax is what? Output tax minus input tax. Correct or not? How much is the net tax always? Output tax minus input tax. So output tax I am paying 8 lakhs. What is the input tax that I have? 3 lakhs. So 8 minus 3, 5 lakhs. Now on purchase, how much I paid out of my pocket? 3. On sales, how much I am paying out of my pocket? 5. Now how much refund I will be getting? 8. How 8 I will get? Already at the time of purchase I paid 3 and I took as credit. That also I will get as a refund. Are you understanding? Then again at the time of sale I am paying 5. That also I will get as a refund. So therefore I will get a refund of gross IGST on outward supply. Second option. That output tax I will not pay. Output tax I will not pay. But on purchase I already paid 3 lakhs na. That 3 lakhs I will get as a refund. So which means then also the burden will become 0. You can see the illustration here. Inputs, input services and capital goods are purchased by ABC Private Limited, an exporter. And so these purchases are used for making export. The value of export is 8 lakhs, excluding GST at 12%. And to make this product, they purchased inputs, input service and capital goods, value 1 lakh, 50,000 and 1 lakh 50,000, excluding this GST. Now, tell me what are the two options available. Option 1 is what? Pay IGST and get refund using ITC and get the refund of gross IGST. Okay. Now, don't see the answer. From this question itself, you see, what is my output tax? What is my output tax? Just take your calculator and check. What is my output tax? 8 lakhs into 12%. What is my output tax? 96,000. Okay, my output tax is 96,000. Same way, count my input tax. Count my input tax. So take these 3, multiply and arrive at a number. Use M plus. 1 lakh into 12% M plus. 50,000 into 18% M plus, 1 lakh 50 into 12% M plus. You will get some ITC total. 1 lakh into 12%, 12,000. 50,000 into 18%, 9,000, that is 21,000. 1 lakh 50 into 12%, 18,000, 21 plus 18, 30. 39,000. We have input tax credit. So what is output tax? 96. What is input tax? 39. 96 minus 39? 57. So how much I will pay? 57. At the time of purchase, how much I paid? 39. At the time of sale, how much I will be paying? 57. 57. 96 minus 39. Sorry, 96 minus 39, 57. So how much refund I will be getting? 96. How 96 I will get as refund? Sir, whatever I paid at the time of purchase, 39 also I will get as refund. Whatever I am going to pay at the time of sale, 57, that also I will get as a refund. So what is my tax burden? 0. That's why it is known as zero rated supplies. Is it clear? Now check the answer. Gross liability 96,000, input tax credit 39,000, net liability 57,000. So the refund that we get is 39 plus 57, 96. So that is this. Next, option 2. Now let's see option 2 here. Option 1 you all understood, everyone? Once again, can you tell me what is option 1? Pay IGST and get refund of gross GST. Okay, then option 2. Option 2 is what? Don't pay GST. So output tax will be 0. Output tax is 0. Input tax 39,000. And therefore, I will not pay tax on outward supply. Output tax 0. On input, I have paid 39. In that 39, I will not get full refund. I will not get full refund. I will get refund only with respect to inputs and input services. What is inputs? 1 lakh into 12%, 12,000. Input services, 50,000 into 18%, that is 9,000. I will get 21,000 rupees only as refund. Sir, what about remaining 18,000 capital goods credit? They don't want to give capital goods credit here. So that you can adjust with your future liability. So therefore, how much refund we will be getting? Only 21,000. Refund of ITC 21,000 and input tax credit balance is 18,000, which is related to capital goods. Now, this is of course not useful for exam, not this concept. This concept is useful for exam, but what I am going to ask you, that is tax planning here. You tell me which option is better, option 1 or option 2? Option 1. Why option 1 is better? Even capital goods credit also I am getting in the form of cash. But in case of option 2, that capital goods credit is in the form of credit, which I can adjust with my liabilities only, but I cannot use it for any other purpose. If it is cash, I can use it for any purpose, correct or not? So option 1 only better. But option 1 has got a small disadvantage. What is the disadvantage? I have to pay that 57,000 and wait to receive it, time value of money. Is it clear? I have to pay that 57,000 and wait till I receive the money. So therefore, time value of money is involved. If I am okay with it, then option 1 is only preferable. That too, when I will go for option 1, only if I have credit on capital goods. If I don't have credit on capital goods, I am indifferent, correct or not? Definitely I will go for which option? Option 2 only, because I don't have to pay any amount, okay, on outward supply. So this is with respect to zero rated supplies. Now, a small change here. What if fully it is not export? Not necessary that everyone will be making export now. Partly there will be domestic and partly there will be export. Will you agree with my statement? 3 lakhs and export is how much? 5 lakhs. Projector not working. So export is 5 lakhs. And on 3 lakhs, what is the rate of GST? 12%. 5 lakhs also 12%. So how much that comes to 3 lakhs into 12%? 36,000. 5 lakhs into 12%? 60,000. So the total will be 96,000. No change, correct? Then minus input tax. How much is the input tax? No change. No change. 39,000. 39,000. Now when you adjust 96,000 with 39,000, what is our net tax? Net liability? 57,000. Ditto? Yes? Now here, how much is the refund that you will get? How much is the refund that you will get? 96,000 or 57,000 or 60,000? 60,000. Why 60,000 you will get as refund here? Because this 60,000 is the gross GST paid on export. So that 60,000 only you will get as refund. Is it clear? And the logic behind this 60,000 is that out of this 39,000 you will get 5 by 8. Why 5 by 8? Tell me. Why 5 by 8? Total turnover is how much? 8 lakhs. In that export turnover is how much? 5 lakhs. Actually you get refund only because of which turnover? Export turnover. So therefore 5 by 8. Again on this 57,000, 5 by 8. How much? 5 by 8 of 57 and 39,000 is nothing but 60,000. You cross check. 39,000 into 5 by 8 means whatever GST you paid on purchase into 5 by 8. Whatever GST you are going to pay on sale into 5 by 8. The sum of these two is 60,000. But this logic you don't need to remember. What you need to remember is how you got this 60,000 is nothing but gross GST on export. What is the gross GST on export? 60,000. That is a refund. Is it clear? Yes. Now, suppose if it is option 2. What is option 2? You will not pay GST. So therefore, what will be the output tax? Wrong. Not 0. 36,000. So export only 0 pa, but domestic there will be sales na, and there will be GST liability. So therefore, the liability will be 36,000. 36,000. And what is the input tax? What is the input tax? You have 39,000. Can we use for 36,000 fully? Yes. Use 36,000 fully. Then what will happen to our net liability? Net liability will become 0. Net liability will become 0. So how much is the input tax credit? We had 39,000. In that 39,000, how much we use? 36,000. So the net liability will become 0. How much is the refund that we will get under option 2? If you see refund here, ITC into proportionate ITC related to export. How much is the proportionate ITC related to export? Export divided by total turnover. What is the ITC refund we will get under option 2? See the previous question. See the previous part. How much is the ITC refund we got under option 2? 21,000, correct? Why 21,000? Only with respect to inputs and input services. So 21,000 into, what is the export turnover? 5 lakhs divided by total turnover 8. 21 into 5 by 8. How much? 13,125. But you will get an actual refund of 3,000. Why you will get an actual refund of 3,000? Because even though you are eligible for 13,125, but what is the balance in ITC that you have? 3,000. Sir, 39,000, 36,000 already spent. So how much refund you will be getting? Only 3,000. You understood or not? So that is with respect to this. And sir, you can see maximum refund ITC into export turnover by 0 rated, that is total turnover, and 13,125, but you will get a refund of only 3,000, which is balance in ITC. So before break, we have been discussing GST Council, but because of the power cut, so I am repeating that points again. So concentrate. What we have seen is GST Council is basically a decision-making body under GST. So in this, what happens is that as GST is a dual GST model, so both central government and state government should get the power to take the decision. That too, it should be a common decision-making body. That's why they created GST Council, which is not a government authority, but a constitutional authority. So GST Council will derive its power from Article 279A of the Constitution. And who will be constituting this council? It is the President of India who will constitute this council. And who is the head of this council? Union Finance Minister is the chairman of this council. And in this council, totally there will be 31 members. How 31 members? For 28 states, there will be 28 state finance ministers. And for 3 union territories with state legislature, we have 3 finance ministers and 1 union finance minister and 1 union MP who is in charge of revenue for the 5 union territories. Okay. So this 33 members will be the council. So it contains 33 members, and here I gave the list. And what is the quorum for GST Council? It is 50%. 50% means, what is a quorum? Minimum number that should be present to call a meeting as a valid meeting is called as quorum. So what is the quorum for GST Council meetings? 50%. What is the total number of members in GST Council? Just now we saw 33. In the 33, 50% is what? 17. So quorum is minimum 17 members, and we have weighted votes. The decision making in the GST Council will be through weighted majority. Central government vote and state government vote is not having the same majority, like same weightage. Central government vote will have 1/3 weight, but state government votes will have 2/3 weights. Out of this 33, how many votes are having 2/3 weight? This 31 votes will have how much weightage? 2/3 weightage. And these 2 votes will have how much weightage? 1/3. 1/3 means, what is the total weighted votes? What is the total weighted votes? 28 plus 3, 31. 31 into 2 by 3. 31 into 2 is 60. 31 into 2, 62 divided by 3 plus 2. 2 into 1 by 3, 2 by 3. So 62 plus 2, 64 divided by 3. So this is the total weighted votes. You understood how we got? Come on, tell me. First, central government vote will have how much weight? 2/3 weight. State government votes will have, central government vote will have 1/3 weight. State government votes will have 2/3 weight. So this 28 is state government. This 3 also state government. So 28 plus 3 will be 31. 31 into 2 by 3, that is 62 by 3. Then these 2 votes will be having 1/3 weight. So 2 into 1 by 3, 2 by 3. So 64 by 3 is the total weighted votes. In this total weighted votes, how much should be the voting for a decision to be taken? A majority is required. What majority? A simple majority or a 3/4 majority? 3/4 majority required. So tell me, what are the 3 points you need to remember here? First, number 1, So quorum is 50%. Second, central government vote will be 1/3. State government vote will be 2/3 weight. And third point, so in order to take a decision, how much majority is required? 3/4 of the weighted majority is required. Mainly for MCQ purpose, these points will be tested. Just keep in mind. Then, other points to remember before that. So in the break time, 2 questions students have asked me. Number 1, sir, if there is a sale that takes place between one union territory without state legislature to another union territory without state legislature. For example, Ladakh and Chandigarh. Ladakh is also union territory without state legislature. Chandigarh also union territory without state legislature. What will be the nature of supply? It is still inter. One union territory to another union territory is inter. And the type of GST will be IGST. And it will be levied by central government fully. And there is no sharing. Why no sharing? Because we don't have union territory with state legislature in this. Then next. Another doubt is that even though the refund that we got in that question part 2 is 13,125, why we got only 3,000 rupees as refund? See, always the refund is subject to balance in ITC. So many times I used to tell in the class also that if you have a ATM card with 10,000 rupees limit, you go to the ATM center and you try to withdraw 10,000, you will get, provided there is that much balance in your account. If in your account only 100 rupees is there as balance, how you will get 10,000 rupees? In that logic, even though you are eligible for a refund of 13,125, but whatever balance that you have in your credit ledger is only, that is input tax credit account is only 3,000. So that much only you will get. Suppose if you have 10,000, that much you will be getting. Suppose if you have 20,000, you will get 13,125 only. Then see these other points to remember. Which is the first country to implement GST across the globe? France. France became the first country to implement GST, and in India, GST is implemented because of one committee recommendations. What is that committee? Dr. Kelkar Task Force has recommended the implementation of GST, and effective date of implementation is 1/7/2017. See the next concept, that is GST network. As GST involves CG, SG, then taxpayers and banks and financial institutions, connecting these 4 people, or the 4 people, central government, state government, taxpayers and banks, connecting these 4, there is a need of a single system, and that system should be information technology driven system, so that whatever process, it will be automated and the reports will be generated. For that reason, they created GST network. So GST network is an entity. Basically, they provide information technology infrastructure for the implementation of GST. See this, it provides information technology infrastructure for implementation of GST. It is also referred to as common portal. And they provide services to whom? Central government, state government, taxpayers, banks and other stakeholders. And is this GST network a government entity or a constitutional authority? Government entity, it's not a constitutional authority. And it is a 100% government owned entity. In that 100%, central government owns 50% and state government owns 50%. Okay, all state governments put together. So GST network is a 100% government owned entity, 50% owned by CG, remaining 50% by all SGs together, and it provides information technology infrastructure for implementation of GST to CG, SG, taxpayers and banks. What are the various functions of GST Council? Today, as a GST network, today whenever we are making the return filing, so any return filing, registration, payment of taxes, application for refund, everything should be through this common portal. So therefore, it facilitates registration, payment of tax, furnishing of returns, settlement of IGST, e-way bill, even e-invoicing, like this one concept is there. All those things will be through GST network. So this GST network and GST Council, you mark as important for short note. This can be tested. GST Council and GST network. Then The last area in this is IGST settlement. When there is a need of IGST settlement that arises, what happens is that I told you IGST collected by central government, 50% retained by central government, remaining 50% given to consuming state based on place of supply. But if the recipient is taking ITC, this 50% will not be given to the consuming state. What that recipient is going to do with that particular IGST credit, accordingly the revenue will go. For example, say this. So there is a supplier who is located in Tamil Nadu. There is a supplier, Mr. X, who is located in Tamil Nadu. And there is a recipient, so Mr. Y, who is located in Kerala. Now, this sale will be definitely interstate sale. And in this interstate sale, what is the type of GST that is involved? IGST. So, what X will do? X will collect price plus IGST. And this IGST is given to which government? Central government by Mr. X. Up to this clear? Now, recipient is taking input tax credit. What is input tax credit? Tax paid on inward supply. So therefore, Mr. Y is paying some tax on his purchases, correct? So this IGST will be taken as credit. How much is that IGST? Let's assume this IGST as 12,000 rupees. So this 12,000 recipient, Mr. Y, took as input tax credit. So what is the input tax credit to the recipient, Mr. Y? 12,000. Now, what is the outward supply of Y? What is the outward supply of Y? That we need to analyze. Who will do this? We will not do. It will be done by the portal, because this IGST settlement is one of the function of GST network. You understood or not? One of the function of GST network is IGST settlement. So, whatever discussion I am making now will be done by whom? Taxpayer or GST network? GST network. So, this recipient in turn makes sale. Okay. Suppose if this is intrastate sale. Intrastate sale. What is the liability that is involved? CGST and SGST, correct? And let's take CGST is 15,000 or 10,000 and SGST 10,000. SGST 10,000. Now concentrate. What is the credit that Mr. Y is having? What is the credit that Mr. Y is having? IGST credit. Am I right? Please respond here. IGST credit. This IGST credit can be used for payment of CGST liability as well as SGST liability. That we will be learning the manner of utilization of credit. But try to remember now, IGST credit can be utilized for payment of CGST liability and SGST liability. This CGST liability payable to which government? Central government. SGST payable to which government? State government. Now, in this 12,000, how it will be utilized for CGST, SGST? The law says in any manner, any proportion you can use it. Now, what I wanted to do in this 12,000, I want to spend IGST credit of 10,000 for CGST liability, and still how much IGST credit I have? 2,000. So IGST credit of 2,000 for SGST liability. Can I use this way? Yes. Now see the point here. Now so far this IGST 12,000 is with whom? So far this IGST 12,000 is with whom? Central government. Now Mr. Y set off 10,000 rupees for CGST liability. CGST liability payable to whom? Central government. So this 10,000 now will go fully into central government's account. You understood? So far it was under a suspense account. What was the suspense account name? IGST. Now the moment IGST credit is utilized for payment of CGST liability, how much we utilize? 10,000. So that will go to which account? Central government's account. And 2,000 we are using for payment of what liability? SGST liability. So the 2,000 will go to state government's account. Is it clear? Again I am repeating, what if in this 12,000, equally 6,000 is used. Then 6,000 will go to central government's account, remaining 6,000 will go to state government's account. Okay. What if in this 12,000, 2,000 is used for CGST, 10,000 is used for SGST? Then 2,000 will go to central government, 10,000 will go to state government. So actually what we learned, IGST 50% will go to consuming state, correct or not? Am I right? IGST 50% will go to consuming state, but in this case is 50% going to consuming state? No, depending upon how Mr. Y is going to use that credit for payment of liability, like that it will set off. What if Mr. Y is unregistered? Can he take input tax credit? No. When he cannot take input tax credit, then the ratio will be always 50-50. 50 will go to central government, remaining 50 will go to the consuming state. Understood or not? So therefore, if the sale is made to a registered person, IGST, how the recipient registered person is going to subsequently adjust with his liability, that way it will be adjusted. Suppose if the recipient is an unregistered person, IGST revenue 50% will be going to CG, remaining 50% will go to the consuming state. Got the clarity on this? Now, say this, that is about IGST settlement. There are two situations where the IGST settlement could arise. First, we have interstate purchases. Means what is the credit that we have? You are making interstate purchases, boss. What is the credit that you have? IGST credit. How much IGST credit? 20,000. Now you are having outward supply, that is liability. What liability you have? CGST liability, SGST liability, because it is intrastate. Got it? Now we are using 10,000 and 10,000. Now in this case, this 10,000 will go to which account? Central government account. This 10,000 will go to which account? State government account. So therefore, central government has to pay this 10,000 to state government under IGST settlement. Is it clear? So far this 20,000 was with whom? Central government. Now in that 10,000 will go to the state government. Who will do the settlement? GST network or GST portal. Got it? Now second scenario, you see, reverse. Purchase is intra. Purchase is intra. Means what is the credit that we will have? CGST credit, SGST credit. Sales is inter. Means what is the liability that we have? IGST. How much is the IGST liability? 25,000. Now we are utilizing this 10,000 and this 10,000 for payment of 25,000. Now 10,000 CGST credit, when you adjust with CGST liability, no issue. Same government, correct or not? But 10,000 SGST credit, when you adjust with CGST, like IGST liability, means central government will pay to state or state will pay to center? State will pay to center, because which credit we are adjusting with what liability? Yes, GST credit we are adjusting with IGST liability. So state government has to pay that money to central government again under IGST settlement. So tell me, what are the two situations where IGST settlement will arise? Purchase is intra, sale is inter, or purchase is inter, sale is intra. And situation 1, IGST credit set off against SGST liability. So who should pay to whom? Central government should pay to state government. Good. SGST credit set off against IGST liability. Then state government has to pay that amount to central government under IGST settlement. This IGST settlement concept is not that much important, but it is there in the study material. That's why we have just discussed this. So far, not even one question is asked in this concept. Okay. So with this, we completed segment 1, introduction to GST. So now we got the clarity about the basic aspects of GST. Now we are moving on to one very, very important chapter, that is input tax credit. So kindly take input tax credit, which is segment number 6, page number 97. Segment 6, page number 97, input tax credit. Already you got a clarity about what is input tax credit meaning, correct? Now, what we are understanding are the provisions related to the input tax credit, and in that we have section 41 which talks about availment of ITC. What is the meaning of availment of ITC? Taking input tax credit in GSTR 3B is known as availment of ITC, taking the credit. And utilization means what? Set off with the liability, that is known as utilization. So we have two sections now which we are going to discuss. One section is for availment of ITC, another section is for utilization of ITC. Section 41 talks about availment of ITC, section 49 subsection 5 talks about utilization of ITC. Okay, then we have, apart from this, three more sections. See, all these sections are of CGST Act only. SGST Act we don't have in syllabus, IGST Act we don't have in syllabus. So what we have is only CGST Act. So any section that I am referring to, you need to write so and so section of CGST Act, like that. Okay, and try to remember the section numbers as much as you can, because in exam when you are writing along with the section numbers, because income tax also, okay, lot of sections are there and it will be difficult, but GST that many sections are not there. So whenever you are remembering, like try to remember with section number the provision also, so that in exam when you are writing with section number, they feel like, the valuer feels like, you know, you are a pro in the subject. Reality, you and me only knows, but the valuer will think that, okay, so this student knows everything, like that. So we need that actually. So then only we get the full marks, that's why. Okay, so therefore what is that we need to know here? Section 41 which talks about availment of ITC. Section 49 subsection 5 talks about utilization of ITC, or simply you can remember 49 also. Then three more sections. Section 16 which talks about conditions for availment of ITC. Section 17 என்ன அது வேணும்னு ஆஃப் பண்றாங்களா யாராவது? Okay, so section 17 talks about apportionment of credit and blocked credits. Section 18 input tax credit in special cases. So these are the 5 sections that we have in this chapter: 41, 49, 16, 17, 18. You have to remember with section number. 41 availment of ITC, 49 utilization of ITC, 16 conditions for availment of ITC, 17 apportionment of credit and blocked credit. Apportionment of credit and blocked credit says that there are some cases where you cannot take ITC, that is blocked credit. Apportionment of credit is when I have partly taxable, partly exempted. Can I take full credit? No, I cannot take full credit. I can take proportionate credit. That information is given in apportionment of credit. Then section 18 which talks about input tax in special cases. So there are some special cases where we can take input tax credit, like on closing stock, etc. and all. So these are the sections that we have. With this chapter will be over. Okay, now let's start with section 41. But to know this section 41, we need to have an idea about few returns. Okay, so 3 returns we need to know, which every person will be filing: GSTR 1, GSTR 2B and GSTR 3B. Okay, about these 3 returns let's try to understand. So if you already know, it's okay, good. Otherwise you can listen to this. GSTR 1 is a return that contains the details of outward supplies. Okay, you don't have to write, just listen enough. GSTR 1 is a return that contains details of outward supplies. So in GSTR 1 we mention what details? Only sale details, outward supplies. Whereas GSTR 2B is a return that contains the details of inward supplies. Okay, so details of outward supplies will be there in GSTR 1. Details of inward supplies will be there in GSTR 2B. And GSTR 3B is a consolidated return. consolidated return. This consolidated return contains the details of both inward supplies and outward supplies and how much is the liability that we need to pay. Is it clear? So tell me what are the three returns? GSTR 1, GSTR 2B, GSTR 3B. GSTR 1 is details of outward supplies. GSTR 2B, details of inward supplies. GSTR 3B, consolidated return. What does that consolidated return contains? 5 details. Outward supply. Then for outward supply, what tax? Output tax. Good. Then next, inward supply. For inward supply, what tax? For inward supplies, we have input tax. And then we have interest or late fee. What is the difference between interest and late fee? Whenever there is a delay in payment of tax, then we have to pay interest to government. Whenever there is a delay in filing return, we have to pay late fee to the government for delay in filing returns. And this interest is usually at what rate in GST? For payment of GST, like GST, there is a delay, we have to pay interest. Interest at what rate? Remember, 18%. What is the rate of GST interest? 18% per annum. Not GST is 18%. The rate of interest is 18%. And this 18% is computed on what? Tax, GST, which is not paid or short paid. Okay. And then, so late fee we need to pay. We have different late fees, but basically late fee will come whenever we are filing the return late. Okay. These 5 details will be there in GSTR 3B. You understood the overview about this? Now, at the time when I file GSTR 1 for my outward supplies, now I am into the business of taking classes, consulting, etc. and all. So I will be having lot of clients who are registered as well as unregistered. Who are my registered clients? So those who are registered and for whom I provide my consulting services, or the resellers who sell the Google Drive lectures of mine, they are my registered clients. Who are my unregistered clients? Students. So students are unregistered people. So from them also I will be charging GST. Got it? Now this is my outward supply. Where should I report this outward supply details? In my GSTR 1. Are you concentrating? So in my GSTR 1, I need to report this outward supply details. Got it? Should I pay the tax now? No. At the time of filing GSTR 1, tax not payable. You got it? Then when we need to pay tax? At the time of filing GSTR 3B, tax is payable. Understood here? So I am first reporting the details of outward supply in my GSTR 1, sale to registered persons, sale to unregistered persons. Okay. Now, GSTR 2B, my GSTR 2B, should I file or I get it? I get it. I will not file. I get it. How I get it? From the portal I get it. How portal will know my inward supply? Now someone will be making outward supply to me. Am I right? For example, I'll be paying money to this place for the purpose of taking the classes, and I'm paying like 30,000 rupees plus GST per day. And for these electrical fittings, AC, etc. and all, I'll be paying some 20,000 plus GST. So in a day, we are paying 50,000 plus GST. Okay. So this is my inward supply. Got it? Now what this place owner will do? They will report in their GSTR 1. Are you getting? For me, it is inward supply. Means for this place's owners, it is outward supply. So they will be reporting this under GSTR 1, under registered person or unregistered person, sale to registered or sale to unregistered. I am registered person, so they will mention it as sale to registered person. So it will be reflected in my 2B. So portal will understand based on the GSTR 1 of my supplier. Portal will understand what is my purchases, inward supplies, based on what? Based on GSTR1 of my suppliers. Is it clear or not? So whatever inward supplies that I make, that data will be coming in GSTR2B. So this 2B data, again, it is just the ITC element, nothing. Now, in GSTR1, I reported my output tax. In GSTR1, I have the details. GSTR2B, I have the details of input tax. These two things I will keep in GSTR3B and I will set off and pay the remaining amount. Understood the process? Yes? Now, what does section 41 says? That whenever supplier reports the details of outward supplies in GSTR1 or IFF. What is IFF? Invoice, you can write there. IFF refers to invoice furnishing facility. Invoice furnishing facility. Invoice furnishing facility. IFF refers to invoice furnishing facility. That is, not everyone is required to file GSTR1 on a monthly basis. They are required to file returns on a quarterly basis also. They can file the returns on quarterly basis also. If they are filing their returns on quarterly basis, they are required to report the details of outward supply in one statement called as IFF. Just keep this IFF now aside. We will again discuss this in QRMP scheme. We have one scheme called as quarterly return monthly payment. There I will connect this. So my supplier reports the details in GSTR1 or IFF and he files the return by the due date. Now, as and when he files the return by due date, what portal will do? Okay, so listen. So whenever our supplier reports the details in their GSTR1, what common portal will do? Will make this data available in my GSTR2B. Okay, so first supplier will file GSTR1. Based on the GSTR1 of the supplier, the data will be reflected in GSTR2B of the recipient. Whatever reflects in 2B of the recipient is known as matched ITC. So come on, tell me what is matched ITC? ITC reflected in GSTR2B of the recipient is known as matched ITC. Once again, what is matched ITC? ITC reflected in GSTR2B of the recipient is known as matched ITC. Now, concentrate, everyone listen. Why will there be difference between my books related ITC and this GSTR2B ITC? Will there be difference or not? There will be difference. There will be difference. Why there will be a difference between these two? Because my supplier has not filed the GSTR1, or another reason. My supplier filed GSTR1 but he filed late after due date. You got it? He filed but he filed after due date. What is the first reason you told me? He did not file GSTR1. Number two, he filed GSTR1 but he filed it late after due date. Third, he filed GSTR1 but he did not mention the invoices in GSTR1. So means my invoice he missed, okay? Or he filed GSTR1, he mentioned my purchase invoice but he mentioned it wrongly. Instead of 10 lakhs, he mentioned it as 1 lakh. You got it? So therefore 9 lakhs related credit is not reflected in 2B. You understood? Now in these cases, 4 cases I told you. My supplier did not file GSTR1, or he filed GSTR1 due date, or he filed GSTR1 but he did not report the invoice, or he filed GSTR1, he reported the invoice but wrongly he reported. Because of this, I will not be getting full credit in my GSTR2B. Can I take that credit? No, because unfortunately, now only those credits which comes in 2B can only be taken as ITC. So remaining credits I cannot, even though I have purchased it, everything. So even though I have purchased it, I paid it, everything, whatever it may be, that is irrelevant. Whatever it comes in 2B, that is only relevant as per section 41. You got it? And this matched ITC, we need to make 6 adjustments. After making these 6 adjustments, then we can take it as ITC in our 3B. You got it? What are those 6 adjustments? First, what is the base? Base where it starts? ITC as per 2B. ITC as per 2B. For this ITC as per 2B, so 6 adjustments we need to make. 3 exclusions and 3 inclusions. First, look into the exclusions. Blocked ITC. Blocked ITC means what? I told you already. There are some inward supplies which are kept under blocked ITC even though used for business purpose, but I cannot take input tax credit. For example, motor car. Motor car is a blocked credit. So even though motor car is used purely for business purpose, but it's a blocked credit, GST paid on motor car, I cannot avail as ITC. But whatever is blocked credit to me, portal will not know. Understood? Whatever is blocked credit to me, portal will not know. So what portal will do? The moment my supplier files GSTR1, the portal will make it available in my 2B. So, but I should not take. Why I should not take? Because it is blocked credit. So, what I should do? I should deduct. You got it? Then, next. Suppose if it is not at all coming in 2B. If it is not at all coming in 2B, ignore. If it is coming in 2B, actually it's a blocked credit. It came in 2B. Why it came in 2B? Because my supplier reported the invoice. So, I need to deduct. If it is not at all coming in 2B, should I deduct? No, ignore. Okay. But this is the latest amendment. If you are not getting question on this, consider that is not an indirect tax paper. Okay, that much important it is. Definitely you have to apply this in the exam. So please concentrate, listen. So first you need to take what as the base? ITC as per GSTR 2B minus blocked credit minus inward supply used for non-business purpose, personal purpose. Can you take credit on some inward supply used for personal purpose? No, you should not take credit because input tax credit, there is one section 16 condition for availment of ITC which says that the inward supply should be used or intended to be used in the course or furtherance of business. Are you understanding this? Used or intended to be used in the course or furtherance of business. If it is your personal expenditure, you cannot take ITC with respect to that. So, therefore, that also you take out. But portal don't know. Portal don't know whether you are using it for business purpose or personal purpose. Portal don't know. You understood or not? So, lot of people who purchase smartphones today, they will buy the smartphone under GST invoice. Why they will buy the smartphones under GST invoice? Because at 18% credit they will be taking. But whether this smartphone is used for business purpose or personal purpose, portal don't know, na? Correct? But you are using it for non-business purpose, you should take out. But sir, practically, is everyone doing it or not? No one is doing it. But for exam purpose, we cannot take that way, na? For exam purpose, non-business means you cannot write. But in practice, no one is telling that way. Everyone is taking credit like that, we cannot take. So therefore, you have to minus that. Then next, inward supply used for exempted outward supply. So I told you already, if my outward supply is exempted, I cannot take ITC on my inward supply. Correct or not? So therefore, these 3 things we should take out. These 3 things portal will not know. So portal may give it in GSTR 2B, but we should not take. Come on, tell me what are the 3 exclusions? First, what is a base? What is a base? ITC as per 2B minus blocked credit minus used for non-business minus used for exempted. Okay, then. Suppose if it is not at all coming in 2B, even then should we do minus? No. If it is not at all coming in 2B, ignore. If it is coming in 2B, but if it is related to these 3, you should deduct. Okay. Then 3 additions we need to make. What are the 3 additions? GST paid under RCM. What is RCM? Reverse charge mechanism. I am making some inward supply on which I pay GST under RCM. Now, this will not be reported by my supplier in GSTR1. So, I can take it as ITC even though not reported. So, we have an exception. We have exception to match credit. What are the exceptions to match credit? Number 1, GST paid under RCM. Suppose if my supplier reported it is in GSTR1 and if it is already there in GSTR2B, again will I add? No, I will not add. You got it? See, these are to be excluded and included. If it is not reflected in 2B, don't exclude. You understood? Suppose if it is not reflected in 2B, you need to add. If it is already included in 2B, no need to add again. Just like inclusions and exclusions which we learn in valuation. An amount is to be included and it is already included. Ignore, correct or not? Same way an amount is to be excluded. It is already excluded. Ignore. An amount is to be included. It is not included in the given value. So you need to add. An amount is to be excluded. In the given value, it is not excluded. So we need to deduct like that. Okay. So now, what are the 3 additions in that first addition is what? GST paid under RCM. Then next, reavailment of ITC reversed earlier. What does it mean? That is, already we availed the ITC somewhere 6 months before and we reversed it. Why we reversed it? There are some situations where we need to reverse the ITC. Example, if you are not making payment to supplier within 180 days from the date of invoice, we need to reverse ITC. So some reason is there. So we reversed. Again, as and when we make payment to the supplier, we can reavail. But when you reavail, it will not come in this month to be. Correct or not? Sir, we first availed, sir. Reversed it, again reavail, it will not come in this month to be, even then I can take it as ITC. That is known as reavailment of ITC reversed earlier. Then third, ITC pertaining to earlier tax period, not taken in that tax period, but I want to take it now. Can I take? Yes, because there is a time limit for availment of ITC. 30th November of the succeeding financial year or date of availing, date of filing annual return, whichever is early like that, one time limit is there. Within that time limit, I can take ITC, not necessarily that month. For example, April 2023, that month I did not take. Why I did not take? Maybe I forgot, I missed. Now, September 2023, can I take ITC? Yes, I can take, but it will not come in September 2023 2B. Why it will not come in September 2023 2B? Because it pertains to April month. So it would have been reflected where? In April 2023 2B. You understood? So that also I can take, even though these 3 are not reflected in GSTR 2B of this month. So come on, tell me, what is the computation steps? Total 6 points. Base ITC as per 2B of the month. Okay. Minus blocked ITC, minus ITC with respect to non-business, minus ITC used for exempted, plus GST paid under RCM, then another plus reavailment of ITC reversed earlier, then another last one, ITC not availed in the earlier tax period pertaining to that tax period. Okay. So this is about how much ITC we avail in GSTR 3B. This is the first part. Now what you need to do is that in the question, see the ITC as per 2B and make these adjustments, and you take the remaining, like whatever figure finally you get, that as the ITC, adjust it with your liability. Okay. Don't take whatever ITC that is given in 2B alone. You have to make these adjustments. Finally you arrive at one number. That number you set off with your output tax. Now, so see this example to get a clarity. ABC and Company is a trader. During July 2022, he makes purchases from A, B, C, D and invoice 1 lakh plus 12,000, 50,000 plus 9,000, 1 lakh 50 plus 27,000, 2 lakh plus 10,000. These are the 4 invoices. What is the GST paid on these invoices? 12,000, just calculate. 12,000 plus 9,000 plus 27,000 plus 10,000. What is the total GST paid on inward supplies? 58,000 is the ITC in his books, correct? But can he take that as real ITC? No. So we need to check how the returns are filed by their suppliers. So that is ABC and Co is making purchase from A. A filed GSTR1 for 1 lakh plus 12,000. B did not file GSTR1. B did not file GSTR1 means can that be taken as credit? No. So C filed GSTR1 but with wrong data, and D filed GSTR1 so with correct data. How much will come in 2B? 40,000. How 40,000? 12,000 plus 18,000 plus 10,000, that is 40,000. So how much is ITC reflected in 2B? 40,000. Now you tell me how much ITC will be taken, 58,000 or 40,000? Only 40,000. Why that 18,000 rupees difference? Because GSTR1 is not filed by B and Mr. C reported the wrong details. That's why that 18,000 cannot be taken. Understood up to this? Now my question to you. Can this 18,000 be taken in future? Yes, we can take in future. What we will do? We will call Mr. B. Bloody idiot, I made purchase from you. You did not file GSTR1, because of which I am not taking the credit. You have to file, otherwise I will file a case on you. So now B will file the GSTR1 at a later point of time. As and when B files his GSTR1 at a later point of time, at that time it will be reflected in 2B of ABC and Co, and they can take it as ITC. Got it? For example, say this. ITC reflected in Mr. B filed GSTR1 of July on 31st August. So therefore it will be reflected in 2B of August month, and they can take it as ITC for August pertaining to July. Got it? Then again we will call C and say that, boss, we purchased for 1,50,000 plus 27,000, but you reported it as 18,000. Either you refund that 9,000 to us or report it in GSTR1 properly. You got it? Now Mr. C will amend his GSTR1, rectify his GSTR1, and in that rectified GSTR1 he reports the data. Say this, Mr. C rectified invoice report in GSTR1. In which month he did the rectification? December. So therefore this 9,000 will be reflected in GSTR 2B of December month, and accordingly this 18 instead of 27 he will add. So therefore that 9,000 we can take in December month. Are you getting this? So which means right now we can take only matched ITC, but it does not mean we cannot take the remaining ITC at all. It will be taken when? Depending upon we follow up with our supplier and ensure that our supplier properly reports in GSTR1 or rectifies. In whichever month he rectifies in GSTR1, those months we can take ITC. Got it? Now these points also will be given in question. What they will do? They will say that matched ITC for so and so last month is this much. Unmatched ITC is this much. The difference amount got matched in this month, current month, like that they will say. So now you need to take that extra ITC in the current month. So what is the one more adjustment apart from this 6? You got the 6 adjustments now. One more adjustment is what? Actually in this 6, the last point is already covered. ITC pertaining to the earlier tax periods. Why you did not take in that earlier tax periods? Because it was not a matched ITC at that period. So now only it came. So that's why you are taking it. You got it? Then, whether taxpayer is eligible to take credit or ITC on all supplies also drafted in GSTR 2B. Yes, he can take, but CBIC FAQ says that there may be other scenarios for which input tax credit may not be available to the taxpayer and same has not been generated by 2B. So he need to self-assess. That is this self-assessed. So this ITC adjustment we do now. What is the name of this? Self-assessed ITC. Now, so we have one more written also called as GSTR 2A. What is that GSTR 2A and GSTR 2B? Actually, 2A is not relevant in today's context, but this 2A is also there. I'll give you a simple difference. You know Google Sheet? Google Sheet, have you seen? What is the advantage of Google Sheet? For example, I shared one Google Sheet with you. If I make any change in this Google Sheet, will it be reflected to you immediately? Yes. So that is what GSTR 2A is. GSTR 2A is a dynamic document. Dynamic document means what? Any change that is made by the supplier will be automatically coming in GSTR 2A. But 2B is like normal Excel sheet mailed to you. If I make any change, will it be reflected in your document? No. So that is 2B. So therefore 2A is dynamic, 2B is static. Okay, 2A is dynamic, 2B is static. And so both 2A and 2B are system generated only. 2A also is generated by system, 2B also generated by system only, based on the details of outward supplies reported by our suppliers in GSTR 1. Okay. So say this, basic meaning 2A and 2B both are system generated based on the details of our supplier. But 2A will take lot of data, but 2B will not have that much. And so nature of document, dynamic and static document, and we have other points, but this much you don't have to write when you get a question on difference between 2A and 2B. Usually they may ask this question for exam as a short note question. Okay, you will never get a 8 marks question and all as theory question. Usually it will be for 2 marks or 4 marks. This is the standard. Suppose if you get a question on distinguish between GSTR 2A and 2B, what is it you need to write? Please write down in your notebook. Is it suffocating air for you? So I think if you open the doors little bit, air will come. Okay, they said there is some issue with the generator, but I'll request them to turn on as soon as possible. See this, difference between GSTR 2A and GSTR 2B. So what is the type of document? GSTR 2A, static or dynamic? Dynamic. And 2B, static, means once it is generated it will not change, but 2A will keep on changing. Then second, that is if the supplier files the GSTR 1 late, will it be reflected in 2A? Yes. But will it be reflected in 2B? No. Because 2B contains the data of the supplier if the supplier has filed the GSTR 1 by the due date. So, if supplier files GSTR 1 after due date, if supplier files GSTR 1 after due date, will it come in 2A? Yes, reflected. But will it be reflected in 2B? No, not reflected. Then, next difference is that what is its purpose? What is the purpose of GSTR 2A? Reference, just for reference purpose. But we have to take ITC on what basis as per section 41? GSTR 2A or GSTR 2B? 2B. So 2B is purpose for availment of ITC. So the availment of ITC is based on 2B. So therefore GSTR 2A is only for reference purpose. Then number 4, TDS or TCS deducted. Not income tax TDS TCS, even in GST also there is TDS TCS, but not applicable for your exam. So this TDS TCS will be deducted by the recipient, but which transaction, etc. and all, you don't have to know that because it's not there in syllabus. That TDS TCS deducted will be reflected in GSTR 2A but not in 2B. So reflected in GSTR 2A but not reflected in GSTR 2B. Okay. So these are the 4 points that you need to write when you get a question on distinguish between 2A and 2B. Okay, easy? But don't write exactly like this. Little bit you elaborate and write. Okay. So 2A and 2B, what is the type of document? 2A dynamic, 2B static. And 2A, where if the supplier files GSTR 1 late, will it come in 2A? Yes, but in 2B it will not come. And what is the purpose of 2A? Just for reference purpose, but 2B is for availment of ITC. Then TDS TCS deducted, will it come in 2A? Yes, but it will not come in 2B. Then the next area that we are going to discuss is this reversal of ITC if supplier not filed GSTR 3B. These are also section 41. Still we are in section 41 only. But this section 41 is now amended to have a rule, that is rule 37A. This is a latest amendment applicable for November 23 exam. This discussion was not there for May 23. So definitely this area can be tested for November 23 exams. What is it about? So far what we have seen, the moment supplier files his GSTR 1, we can take ITC, correct? Your supplier files GSTR 1, you can take ITC. What if supplier not filed 3B? Sir, if your supplier filed GSTR 1, whether he paid tax or not paid tax? Not paid tax. Even then you can take ITC. Am I right? But if your supplier is not paying tax, when he will pay tax? At the time when he files 3B. Again I am repeating, please listen. Your supplier filed GSTR 1. He did not pay tax. You can take ITC. When he will pay tax? As and when he filed 3B, he will pay tax. What if he did not file 3B? Means you need to reverse the ITC. Why you need to reverse the ITC? Because your supplier did not pay the tax. Sir, what logic it is, sir? I paid tax to him, sir. Correct. You paid tax to him. But he did not pay to government. So what should I do? How am I responsible? You are responsible. That's how they created a provision. You understood? You are responsible. You don't like it, leave the country, no issue. But you have to follow this provision. Don't buy from such a supplier who is not paying tax. How will I know at the time when I make payment to him? You understood? Yes, correct. Next time onwards, I will not buy from him. But now I purchased, no. What should I do? Fine, we will give you a time limit. Ensure that your supplier is paying the tax by 30th September of the succeeding financial year. Ensure that your supplier makes payment by 30th September of the succeeding financial year. So which means you purchased in April, June, July till March. After that you have how much time? 6 months time. Correct? So after April, May, June, July, August, September, 6 months time. So in this 6 months time you do follow up with your supplier. Ask him to file 3B. Okay? And if he is not filing 3B, do something to him and ensure that he files it. Okay? And only then, no problem for you. If he is not reporting by September 30th of next financial year, whatever credit that you have taken, you need to reverse along with interest. How much? 18% per annum. Okay? So 18% per annum interest from the date of utilization till the date of reversal. That part we'll see little later. What is that utilization? But you have to pay interest. Okay. So tell me what is this provision? Say this. Your supplier reports the invoice in GSTR 1 and it is filed within due date. As and when your supplier files GSTR 1, automatically it will come in your GSTR 2B, correct? And you have availed the ITC also based on this, correct? Now your supplier not filed GSTR 3B by September 30th of the next financial year. Now what will happen? Whatever ITC that you have availed needs to be reversed along with interest. By when you need to reverse along with interest? By November 30th of the next financial year. So how many months you have? October, November, 2 months you have. What if you are not doing it? They will levy penalty also on you. Who will levy penalty on you? Government will levy penalty on you. Because your supplier has not filed GSTR 3B. You understood or not? So it is literally atrocious here. Maybe while drafting this provision, the one who was writing this was high on weed. Okay. So therefore, they have drafted this way. However, I made a purchase from my supplier and he did not file 3B. Will he listen to me first of all? If I am having a purchase power or a bargaining power with my supplier, he will listen here. So somewhere in strategic management, you would have learned Porter 5 forces model, bargaining power with the supplier like that. So this bargaining power everyone will not have. Unless otherwise, if your supplier is dependent on your business, you will have the bargaining power. Correct? Means you are one manufacturer or one producer making huge turnover, your supplier will listen to you. If you are a normal wholesaler or a retailer, you have to listen to your supplier, wherefrom you have the bargaining power and all. So now you cannot ask your supplier also. He will say, I will file here. What is your problem like that? Then tomorrow who is getting penalized? Recipient is getting penalized. So see this, reversal of ITC after September 30th of next financial year along with interest at 18%, but before November 30th of next financial year. And thereafter means afterwards, after September, this 3B he will file. Possible? So we are following up with him. He has to file 3B. See, one date or other he has to pay tax because he reported it in GSTR 1. Had he not reported in GSTR 1, it's okay. It is like, one goat went before the slaughterhouse and started dancing. Now, what that slaughterhouse will do, he will see, okay, like that. And whenever the stock is over, he will kill that goat. You understood or not? So, the moment you report in GSTR 1, every person has to pay that tax. So, he has to file that 3B. So, he will file that 3B late, somewhere after September 30th of the next financial year. Can we re-avail the ITC? Yes, we can re-avail the ITC. But interest, ITC itself is given to you. Be happy on that. Whatever interest you paid is gone. So, in this entire process, what is the loss to you? Interest is the loss. And that is the gain to the government. So, government got a new income called as interest income. They started a new entity, GST FinCorp. You understood or not? So, they started one interest company and therefore, this interest will become some good revenue for them. Okay. So, therefore, what we should do, ensure that your supplier is filing GSTR 3B within September 30th of the next financial year. Otherwise, you have to pay interest. At what rate? 18%. Okay. And how it should be computed? From the date of utilization till the date of reversal or payment. What is this date of utilization? Previously, interest used to be computed from the date of availment. But now they modified it as date of utilization. Means in whichever month the ITC balance falls below the availed ITC, in that month we have utilized. Example, listen, everyone listen. 1 lakh rupees is the ITC that you availed. Balance in ITC for this month is 1 lakh 50. Whether I utilize this 1 lakh? No. Availed ITC 1 lakh pa. And a balance 1 lakh 50. Am I using this 1 lakh this month? No. Next month the balance 1 lakh 30. Am I using? No, which means if I maintain this 1 lakh balance every month, I have not utilized that 1 lakh as ITC. You got it? So first month 1 lakh 50. Whether I utilize that 1 lakh ITC? No. Second month 1 lakh 30. I did not utilize. Third month 1 lakh 20. I did not utilize. Fourth month it came to 90,000. Did I utilize? Yes. How much I utilized? 10,000. How much is the availed ITC? How much is the availed ITC? 1 lakh. And in that 1 lakh, what is the balance in ITC now? 90. So which means to what extent I utilize? 10,000. So on the 10,000, we need to compute interest from the month in which it is utilized till the month it is reversed. You got it? Suppose 1 lakh. Next month the balance in ITC came to 60,000. Then how much I utilized? 30,000. Already 10,000 utilized. 90. Now it came to 60, which means how much I utilized? 30. On that 30,000, we need to compute interest from the 5th month till the date of reversal. You got it? So therefore, what is the meaning of utilization? What is the meaning of utilization? That month in which the availed ITC falls below the balance, that is known as utilized ITC. You got it? So from the date of utilization till the date of reversal, we will do some sums. While discussing payment process, we have interest computation and all, there we will see that. But right now you need to understand how to do the computation of that. So from the date of utilization till the date of payment. Then whenever your supplier files a GSTR 3B after September 30th of next financial year, whatever ITC that you have reversed, you can re-avail. Okay. So in this process, who is at the disadvantageous situation? Recipient. So therefore, recipient should enter into an indemnity contract with the supplier that, boss, if you are not going to pay the tax by September 30th of next financial year, using this indemnity clause, I will recover this money from you. Like that, a separate indemnity contract should be made, or the payment should not be released to the supplier. Something we need to do. So otherwise, the recipient is only at the loss. You got it? Then, so that is about section 41. And we will see one small illustration related to section 41. So kindly make note in your notebook. Illustration on section 41. For July 2023, ITC availed in 3B, availed in GSTR 3B by Mr. X is rupees 1,50,000. Out of that, ITC of rupees 30,000 pertains to an invoice for which supplier not filed GSTR 3B, not filed GSTR 3B by due date. Okay. So July 2023, ITC availed in 3B by Mr. X is 1,50,000. Out of that, ITC of 30,000 pertains to an invoice for which supplier has not filed 3B by the due date. Whatever due date that is permitted, he did not file. Now, so such 30,000 ITC is paid by Mr. X on 20th October 2024 along with applicable interest. Along with applicable interest. Now, compute interest payable if entire ITC utilized in the month of July 2023. Okay. So I'm repeating the question. For July 2023, ITC availed in GSTR 3B by X is 1,50,000. In this 1,50,000, there is a ITC 30,000 related to one invoice, and that invoice, for that invoice, the supplier did not file GSTR 3B by the time, whatever is the time limit permitted, that you should know. So by that time. So now what this X did, he paid that 30,000 rupees because supplier did not pay tax. So he reversed that ITC 30,000 rupees along with applicable interest on which date? 20th October 2024. Compute interest payable if the entire ITC utilized in the month of July. So in July month itself, the entire ITC is utilized. Okay. Now you need to compute the interest. Come on, try this. I'll give you 5 minutes time. Don't discuss. You do it independently. Then only you know whether you have learned this or not. Anyone got the answer? Yes. 2,250. 5,400. 6,750. Okay. One more option so that option D will come. Okay, say this. Can I do? Yes? Okay. Here, first of all, what is the time limit by which supplier should file GSTR 3B? 30th September 2024. 24. Why 24? This pertains to which financial year? 2023-24. What is the next financial year? September 30th. September 30th, 2024. Okay. So write down. Invoice pertains to July 2023. Invoice pertains to July 2023 in brackets financial year 2023-24 for which invoice pertains to July 2023 financial year 23-24 for which due date of GSTR 3B is 30th September 2024. 30th September 2024. As supplier not paid by this time, Mr. X should reverse ITC. How much? Should reverse ITC of how much? 30,000. How much is the invoice related GST? 30,000. 30,000 under section. What is the section? 41. Read with one rule. What is the rule? Read with rule 37A. Supplier not paid by this time, so Mr. X should reverse ITC of 30,000 under section 41, read with rule 37A. And interest needs to be computed on what? This 30,000 only. Am I right? So what is the period for which interest needs to be computed? Interest computed from which date? Which month we utilized? Which month we utilized? July 2023. For that, what is the 3B due date? 20th of the next month. What is the due date of GSTR 3B? 20th of next month. So therefore, July 2023 if we have utilized means not exactly July end. For July month we will file 3B. Which return we will utilize? Only in 3B return we will utilize. So when we will file the 3B return, we will file the 3B return by 20th. So therefore, interest needs to be computed from 21st of August 2023. And interest computed till. So interest should be computed till which date? It should be computed till the date of reversal. What is the date of reversal? Check the question and tell me. 20th of October 2024. What is the number of days? What is the number of days? 21st August 2023. So in August it will be 11 days. September 30. October 31. November. Then again December. Jan. Feb. March. April. May, June, July, August, September, October. So this many days we need to compute interest. Calculate number of days. 426 days. We need to compute interest for 426 days. Then what is the total interest that is payable? Interest payable equals to, on what we need to compute interest? 30,000. And what is the rate of interest? 18%, simple interest. That's why 426 divided by 365. So 30,000 into 18% into 426 divided by 365. How much? 16,302. I think someone said 6,300 something. I heard 6,000. You said, sir? Can I check? Okay, fine. I trust you. So good, very good. Keep it up. So 6,302 is the interest. Actually, interest provision we easily remember, but from which date to which date is what we need to know. So interest should be computed from which date to which date? From the date of utilization. What is the date of utilization? I gave you, we utilized in the month of July. So which means for July when we will file 3B. Availment of ITC and utilization of ITC will happen in which return? GSTR 3B return. So 3B return. So when we will file by 20th of next month. So what is the due date of GSTR 3B? 20th of next month. So therefore interest is computed from 21st of August. For July month, when we will file 3B, 20th of August. So then from 21st August till the date we are making the payment or reversal, that is 20th of October. So this is the number of days for which we will compute the interest. You understood here? You may get a question in these lines. So for November 23 exam, because November 23 is the first attempt where they are going to test this question, because this provision is applicable from November exam only. So you may get this type of question, not exactly this question. If you get exactly this question, I don't have to take batch at all. I will do question paper discussion itself, okay? So you may get a question in these lines. So that is about section 41. We completed section 41 fully. And the next section what we have is section 49 subsection 5. And as you are sweating, I am also sweating. So we'll take a break, okay? So I'll speak to them what we can do. And can we meet at 1:40? 1:45 you need, okay, take break up to 1:45 and don't sleep afternoon, okay? I'll ensure that something is done, okay? Thank you. We'll meet at 1:45. So far what we have completed is section 41 and now we are moving on to section 49 subsection 5. Section 49 subsection 5 talks about the manner of utilization of credit. So far what we have seen is how to avail the ITC, how much ITC to be availed. So there are three words which you should know: availment of ITC, utilization of ITC and reversal of ITC. Availment of ITC means what? Taking credit. Reversal of ITC means what? Reducing the ITC. So whatever credit we have taken, reducing that is known as reversal of ITC. Utilization of ITC means what? Setting off with the liability. All these three things we will do in one return. What is that return that we will do all these things? GSTR 3B. Availment of ITC, utilization of ITC, reversal of ITC. Can you please repeat what does it mean? Availment of ITC means taking credit. Utilization of ITC means adjusting with the liability. Reversal of ITC means reducing the ITC that we have already taken. So these are the three things. All these three things in which place we will do? GSTR 3B. So far what we have seen is availment of ITC. Now we are going to see utilization of ITC. We have certain principles which we need to keep in mind. So total 4 rules we have. The first rule talks about what are the credits that we can take and we can adjust with what liability. Now on your inward supplies we have CGST credit, then SGST credit, UTGST credit and IGST credit. IGST credit. This is on our inward supplies. On our outward supplies, we will have the liability. So CGST payable, then SGST payable, UTGST payable, and IGST payable. So these are the 4 liabilities on our outward supply. Now, can CGST credit be adjusted against CGST payable? Yes or no? Yes, there is no restriction. Can CGST credit be adjusted against SGST payable? No. UTGST payable? No. But CGST credit can be utilized for payment of IGST. Same way SGST cannot be utilized for payment of CGST, can be utilized for payment of SGST, cannot be utilized for payment of UGST, but can be utilized for payment of IGST. UTGST credit also same, so cannot be utilized for payment of CGST, SGST, can be utilized for payment of UTGST and can be utilized for payment of IGST. IGST credit, no restriction at all, which means we can use it for payment of all the liabilities. IGST credit can be utilized for payment of any GST liability. Now, in this case, if you see, so what is the first rule? Rule number 1 says that there is no restriction with respect to IGST credit, because IGST credit can be utilized for payment of any liability and any credit can be utilized for payment of IGST liability. That's the first point. Rule number 1, first point. There is no restriction with respect to IGST. IGST credit can be set off with any GST liability, any GST credit can be set off against IGST liability. Then second point in rule 1 is that with respect to the remaining 3 credits, respective credit can be utilized for payment of respective liability and cross utilization is not possible. Between these 3, cross utilization not possible. What are those 3? CGST, SGST, UTGST, cross utilization not possible. This is rule number 1. Can you remember this? What is the first rule? Come on, tell me. No restriction with respect to IGST. And in the remaining 3, respective credit should be utilized for payment of respective liability and cross utilization not possible. Then rule number 2. Rule number 2 says as IGST credit can be utilized for payment of any liability. So with which liability we need to adjust first? First we need to adjust with IGST liability. Thereafter we need to adjust with CGST, SGST or UTGST in any manner, any proportion, which means I can use 80% for CGST, 20% for SGST, 50-50 or like 40-60, 20-80, 70-30, any manner, any proportion. But whenever you are utilizing, be careful. You need to ensure that there is a minimum cash outflow. What is the meaning of that minimum cash outflow? See this. IGST credit can be definitely utilized for CGST, SGST liability, but there should be minimum cash outflow. Means unnecessarily there should not be any liability that we pay. For example, to understand this, so we will see with an example, like let's take a scenario. We have CGST, SGST and IGST credits. We have ITC, we have 2000, 2000 and 5000, sorry 10,000. So it is the total credit that we have 14,000. And gross tax, that is gross liability. If you see, what is the meaning of gross liability? Output tax. Gross liability means output tax, tax on outward supply, that is gross liability. Gross liability is 5,000, 5,000 and 5,000. So what is our total liability? 15,000. Now, so here IGST credit we have 10,000, correct? Excess credit we have. We can first use it for payment of what? IGST liability. Thereafter CGST, SGST liability in any manner, any proportion. Suppose if I am utilizing IGST credit, first 5,000 I need to use because that is mandatory. First fully I have to use it for IGST. Then the remaining amount we can use for CGST, SGST. Suppose if I am using for CGST fully, okay, 10,000 exhausted, fully I have spent, yes or no? Now, minus CGST credit minus SGST credit. Now listen, CGST credit, how much we have? 2,000. Can we use it with any liability? We don't have CGST liability. Why we don't have CGST liability? It became 0. What is the CGST liability that we have? 5,000. Now we adjusted 5,000, means it became 0. Then what we will do with CGST credit? We can't do anything with respect to CGST credit. Can we adjust with SGST liability? Why? Cross utilization not possible. Just now we learned. So CGST, SGST, UTGST, cross utilization not possible. Respective credits can be utilized for payment of respective liabilities. Are you understanding? So which means that CGST credit I cannot use. What about SGST credit? How much SGST credit I have? 2,000. Can I adjust it for payment of SGST liability? Yes. Now what will be my net liability? My net liability will be 5 minus 5, 0, 5 minus 2, 3, 5 minus 5, 0. This is my net liability. And what is the ITC that is carried forward? ITC carried forward. So 2,000 rupees CGST credit I have, which I am taking to the next month, correct or not? And for how many months I can carry forward this credit? No time limit. I can carry forward it for n number of years. There is no death for input tax credit. I can carry forward 5 years, 6 years, 10 years, 20 years. It's not like set off and carry forward of losses in income tax. There we have a restriction. So only for 8 years we can carry forward like that. But here we don't have the time limit. Even 20 years, 30 years also we can carry forward and adjust with our liability. When we transfer the business to some other person, we can transfer that ITC as well. Are you understanding? So ITC is like a current asset. We can transfer it to other person. So due to that reason, there is no death to input tax credit. We can carry forward. But this particular way of doing things is wrong. This is a wrong answer. Why this is a wrong answer? What is the net liability we got? 3,000. But what is the total liability? Total liability 15 minus total ITC 14. What is the correct answer? 1,000 is the correct answer. In exam also easily you will know what is the correct answer. How much should be the correct answer? The total of the gross liability minus total of input tax credit equals to 1,000. That only should be net liability. But here how much we got as net liability? 3,000, which is wrong. So we need to do it in such a way that 1,000 rupees is only our net liability. Are you understanding? This is known as optimum utilization of credit balance. So what to do in that case? So ensure that you are not spending more than 3,000 for CGST and SGST. Why? Already CGST credit, SGST credit, how much we have? 2,000, 2,000. So don't spend more than that. Don't spend more than that, which means 5 minus 2, how much? 3. So use 3 for CGST or 3 for SGST and the balance for other. Okay. Or better way is to divide it equally. Better way is to divide it equally because the liability is equal ratio, na? Am I right here? Is the gross liability in equal ratio? In the gross liability ratio, you divide. What is the gross liability ratio? 1:1. So if you divide, what will happen? 2,500 for CGST, 2,500 for SGST, then CGST credit 2,000 for CGST liability, SGST credit 2,000 for SGST liability. There is nothing carried forward as IGST or CGST, SGST credit. We will have only liability, that is 500 CGST, 500 SGST, 0. So therefore 1,000 will come. So therefore it is tallied. Total liability how much? 15. Total ATC how much? 14. Net liability will be 1,000. Is that the 1,000 we are getting? Yes. Alternative answers possible? Yes, sir. Alternative answers also possible. Even then we will get full marks, don't worry. Until the time your total liability is 1,000, you will get full marks. Okay. So what is the alternative answer? Can anyone tell? We can use 3,000 and 2,000. If you are using 3,000 and 2,000, what will happen to the liability? The liability will become 0 for CGST, 1,000 for SGST. So therefore, any alternative way you can do. So in exam, you don't have to do the same way in which I said, but the total should be equals to 1,000. How do you know the total should be equals to 1,000? In the question itself, you see what is the gross liability total minus total ATC total. You should be ensuring that you are getting that 1,000 rupees. Understood, everyone? So this is with respect to the second principle or second rule. What is the first rule? What is the first rule? There is no restriction with respect to IGST, which means IGST credit can be utilized for payment of any GST liability and any GST credit can be utilized for payment of IGST liability. Between the remaining three, respective credit should be used for payment of respective liability. Second rule, the order of utilization. IGST credit should be first utilized for payment of IGST and thereafter it can be utilized for payment of CGST, SGST and UTGST, any manner, any proportion. What about CGST credit? First we need to use it for what purpose? CGST liability only. Thereafter we can use it for payment of IGST. Same way SGST first for SGST liability, thereafter IGST liability. UTGST also first for UTGST and thereafter for IGST liability. Understood? And then next, third principle. So you understood the two principles. First principle is about no restriction on IGST and respective credit for payment of respective liability. Second is with respect to order. First for IGST, then for CGST, then for UTGST, like that. Okay. And third is before touching CGST, SGST credit, the credit of IGST should be exhausted. That's what we did here. Actually in this, you may also get a doubt. Sir, already CGST, SGST we have na. First we will spend that and then we will use IGST credit. No. IGST credit should be used first and then only you should use CGST, SGST credit. There is a reason also for that. IGST credit, whatever we have to spend it first because IGST right now is in a suspense account. Till the time we utilize that IGST for any liability, that suspense account will not move to other liability. Are you getting this? I told you. So if I take IGST credit, set off with CGST liability, so far IGST revenue is in suspense, that will go to central government. If I set off IGST with SGST liability, it will go to state government. Are you understanding? So that's why they are telling first boss use IGST credit, then only you set off CGST or SGST. You got it? So that is the third principle. Then fourth principle, when we have IGST liability and all the credits, when we have IGST liability and all the credits, first which credit you should use? Anyhow we know, rule 3, IGST credit, thereafter CGST credit, thereafter SGST or UTGST credit. What is the difference between rule 4 and rule 2? In rule 2, we have multiple liabilities and one credit called as IGST credit. Multiple liabilities, one credit, that is IGST credit. First for IGST liability, thereafter CGST, SGST or UTGST, any manner, any proportion. But in rule 4, what we have is that there is only one liability. What is that one liability? IGST liability, but multiple credits. So first IGST credit, then CGST credit, then SGST or UTGST credit. Mainly while solving the questions, these 4 rules will be relevant. Okay. So these 4 rules you need to keep in mind. This is about the manner of utilization of credit. Understood, everyone? Then this illustration is what just now we did. I gave you an explanation, that is this illustration only. That's why I did not ask you to write, because it's already there. This is the illustration which we have discussed. Even though multiple answers are there, but what is the correct answer? 1000 rupees. You need to get a net GST payable of 1000 rupees. So we completed 2 sections. Section 41, availment of ITC. Section 49, subsection 5, manner of utilization of ITC. In this section 49, there is one special point here. Sir, compensation cess. When I purchase something, there is compensation cess. On that compensation cess, can I take ITC of compensation cess? Yes. But I have to utilize the compensation cess credit only for payment of compensation cess liability. I cannot use it for payment of IGST liability also. Example, or with respect to compensation cess, is on motor vehicles, there is compensation cess. So today, when you buy a SUV, okay, or any luxury car, so on that luxury car, we need to pay GST 28% and compensation cess 22%. Okay. Now there is a car dealer. So this car dealer, say for example, let's take Fortuner car. So Fortuner car price is 30 lakhs. Fortuner car price is 30 lakhs. On the 30 lakhs, we have GST at 28% and compensation cess at 22%. So the purchase price of the Fortuner car is 30 lakhs for the dealer. Purchase price is 30 lakhs. On the GST 28%, compensation cess 22%. Literally 50% we are paying as GST. Okay. So 28% is what? 30 lakhs into 28%. 8 lakh? 8.4 lakhs. And what is the compensation cess? 30 lakhs into 22%. 6 lakh? 6.6 lakhs. Now if you see, the total will be like 45 lakhs, correct? Am I right here? 15 lakhs we are paying as tax only. So when you buy a Fortuner car, you will get one normal Toyota car free. Yes, pa. See, 8.4 plus 6.6, 15 lakhs. So lot of cars are there in 15 lakhs range, correct or not? So therefore you will get that. And this much government is getting. You know how much a dealer get margin by selling one Fortuner car? 5 lakhs. 5 lakhs. Dealer will get 5 lakhs. Government is getting 15 lakhs. You understood? So now what car dealer will do, will keep a margin. 5 lakhs margin. Why sir 5 lakhs margin? Because they have to run a showroom, sir. And lot of cost will be there. Every donkey monkey will come for a test drive. They have to give it for a test drive. Fuel cost, who? Their father-in-law will pay. So therefore, all these costs are involved. So dealer needs a margin, and 40 lakhs is the price at which this car is being sold. Now, in that case, what is the GST component on that? 40 lakhs into 28%. 40 lakhs into 28%. How much? 11.2 lakhs is GST, and compensation cess 40 lakhs into 22%. 8.8 lakhs will be compensation cess. So total, how much they will be collecting from the customer? So they will be collecting 40, 59, 60 lakhs literally. 60 lakhs is what they collect from the customer. You understood? And you know what? Manufacturer, you know how much he will get by selling one Fortuner car? 30 lakhs is his price now. Whose price? Manufacturer's price. Manufacturer will get 4 lakhs only. Manufacturer for selling one Fortuner car will get a profit 4 lakhs. Remaining and all is cost. The equipment cost, overhead cost, etc. So by selling one Fortuner car, profit if you see 4 lakhs. Manufacturer makes all the hard work and get 4 lakh profit. Dealer makes hard work and gets 5 lakhs as profit. And government no work, but get 15 lakhs. You understood? That too on what? 30 lakhs. Now see, extra amount only they are getting. Now 11 lakh 20,000 is the GST liability na. This 8.4 lakhs can be set off. You understood? Output tax minus input tax. Same way, can we set off compensations as also? Yes, 8.8 minus 6.6. So the balance 2.2 is only payable. So compensations can be taken as credit? Yes, but can be adjusted only against what? Compensations as payable. Is it clear? Compensations can be taken as credit, but adjusted only against compensations as payable. Can we adjust with any other liability? No. Now I'll give you another example. Now this, from this car dealer, one travel agency purchased Fortuner car, and they are doing it for giving it on rental basis or transportation and all. You understood? So this car has been purchased by one travel agency, and that travel agency is in the business of transportation of passengers. Now can they take ITC with respect to compensation cess? What is your answer? Can they take ITC with respect to compensation cess? Yes or no? No. Why they cannot take ITC with respect to compensation cess? Because in their outward supply there is no liability of compensation cess. Is it clear or not? Normal transportation of passengers into the business, they don't have to pay compensation cess, so they don't have to take ITC with respect to compensation cess. So in exam also you should be careful. Check whether in our liability we have compensation cess. In our liability, if we have compensation cess, take the credit of compensation cess. In our liability, if you don't have compensation cess, don't take credit of compensation cess. Is it clear? And compensation cess can be set off only against compensation cess liability. Can be used for payment of IGST? No. So kindly highlight that point. GST compensation cess can be availed as ITC. I gave it in page number 104. GST compensation cess can be availed as ITC and utilized only for payment of GST compensation cess on outward supplies. Okay. Then, now we are moving on to the next section, section 16, conditions for availment of ITC. First, what is the tax that can be taken as credit? Input tax can be taken as credit. What is input tax? Tax paid under CGST Act. Tax on inward supply. What tax? CGST, SGST, UTGST, IGST, even compensation cess can be taken as credit. Whether it is paid under FCM or RCM, both can be taken as credit or only under FCM? Both. Whether you paid or your supplier paid, on your inward supply you can take credit. Am I right? And even on import we have IGST that can also be taken as credit, that I told you. Am I right? But one tax we cannot take as input tax credit, that is tax under composition scheme. What is this composition scheme? There is a simplified scheme for payment of taxes at reduced rates. Small traders, etc. and all, instead of paying GST at the regular rate, they will be paying GST at the reduced rates. So these people cannot collect GST from their customer. For example, I am under composition scheme. I have to pay the composition scheme tax out of my pocket. I cannot recover it from you. Okay. Suppose by mistake if I recover from you, can you take it as input tax credit? No. So therefore see this. Input tax does not include tax paid under composition scheme. Is it clear? Input tax does not include tax paid under composition scheme. So it can be tested for 2 marks. What is the meaning of input tax? What is it you need to write? Input tax means CGST, SGST, UTGST or compensation cess or IGST paid to a registered person, includes GST paid under RCM, and it includes even IGST paid on import, but it excludes what? Tax paid under composition scheme. Then, so conditions, if you see section 16 subsection 1, we have 2 basic conditions. Only a registered person can avail ITC. That's a simple condition. Definitely unregistered person cannot take ITC because is unregistered person having any liability? No. So therefore he cannot take ITC. So what is the first condition? Only a registered person can take ITC. Condition number 2, the inward supply should be used or intended to be used in the course or furtherance of business means used or intended to be used. I purchased an asset. I have not used it now. I'll be using in future. Can I take ITC on that? Yes. We can definitely take ITC with respect to that. It's not like section 32 depreciation income tax. In section 32 it says only when the asset is put to use you claim the depreciation, otherwise don't claim depreciation. But our GST is not like that. Our GST is always so sweet. It says that you purchase, oh, you spend money, you take the credit, you don't have to use that asset also. Are you going to use it in future? Yes sir, enough. You take the ITC. So used or intended to be used. Are you getting this? Then in the course of furtherance of business. In the course of means existing business. Furtherance of business means some business which we are going to start in future. So definitely we can take. For example, I am into the restaurant business. I purchase some garments. For what? Starting a garment shop above the restaurant. Can I take ITC on the garments purchased? Yes. That will come under used or intended to be used in the furtherance of business. Correct or not? So therefore, what are the two basic conditions? Come on, repeat. Only a registered person can avail ITC. Number two, the inward supply should be used or intended to be used in the course or furtherance of business. Then look into the section 16 subsection 2. 4 additional conditions are there. In that, the person who want to avail ITC should be in possession of tax paid document. Okay. So what is a tax paid document? Tax invoice, debit note, like that. You should be in possession of tax paid document. Sir, without tax invoice, who will take credit, sir? It's not about taking the credit. It's about you should be in possession of that invoice. For example, month 1, you took the credit. You have the invoice, it came in 2B, everything satisfied here, you took the credit. And after 2 years, that invoice is missing. Now, in that case, can the department reject the ITC which you availed 2 years backwards? Yes. Because if the invoice is missing, the credit is gone. Which means you should keep the invoice. Sir, for how many years we should keep the invoice? 6 years. But that provision is not there in exam for you. For you, that provision is not applicable. At CA final level, you will be learning. For how many years we need to preserve the tax invoice? 6 years. Suppose if the invoice is lost, can we enjoy that ITC? No. So therefore, in exam, please be careful. ITC already availed, but now the invoice is missing. Whether we need to reverse that ITC or not? Yes. Okay. At the time of availing ITC itself, if invoice is missing, don't take ITC. Okay. So therefore, first additional condition, the person availing ITC should be in possession of tax paid document. Second condition, so should have received the goods or services. For example, invoice is dated June, but goods are received in September. When they can take ITC, June or September? September. Just because you have the invoice, you cannot take ITC. You should have actually received the goods or services. In case of goods, there is a evidence called as e-way bill. So therefore, everyone will know when we have received the goods. But in case of services, there is no evidence. So practically, no one is waiting till the time they are receiving the service. The moment they get the invoice, they will take the ITC. But that is practice. But for the purpose of law, you can take ITC only when the invoice and service and goods are actually received. Okay, now we will see the third point. Tax should have been paid on such inward supplies either in cash or through input tax credit within 30th September of the next financial year. So already what we have seen in section 41 is that supplier should have filed their GSTR 3B by 30th September of the succeeding financial year. Otherwise, recipient should reverse the ITC, correct? So that is only connected here. So whenever supplier is not paying the tax, how he will pay the tax? Through 3B he will pay the tax. If he is not paying the tax through 3B by September 30th of the succeeding financial year, then the recipient should reverse the ITC. So that is put like that is mentioned here as a condition. What is that? So the recipient should ensure that supplier is filing the 3B, that is paying the tax by September 30 of next financial year. So that is the amendment here. So that is added as one condition. Then the next condition, if you see, recipient should have filed GSTR 3B. So what is this? Because without filing 3B, how the ITC can be availed? What is the meaning of availment of ITC? Taking credit. How we can take the credit? Without filing 3B, the credit cannot be taken. So therefore, the recipient should file GSTR 3B. There is no other way. The only way to avail ITC is through 3B. So that's the reason why they have given that the recipient should file the 3B. Next condition, if you see, supplier should report the details of invoice in GSTR 1 and made it available to the recipient in GSTR 2B, because now we can take only the matched ITC. So supplier has to report the details of invoices in GSTR 1 and that should be made available to the recipient in 2B, means it should be reflected in 2B. If it is not reflected in 2B, recipient cannot take ITC. Then the last condition here is that ITC relating to such supply has not been restricted in GSTR 2B. What is this? That is, supplier files GSTR 1. Supplier files GSTR 1 and the data comes in GSTR 2B, but in GSTR 2B we have two tables. One is ITC available, other is ITC not available. So whatever invoices that are reported by supplier in GSTR 1 is made available in 2B, but it should not be in ITC not available, means it should be where? In ITC available. So it should not be restricted, When it will be restricted? If it is kept under ITC not available, it is restricted. So therefore recipient cannot take ITC. Now, what is the total 6 conditions that we have? So is that 3 conditions is not in the control of the recipient. So 3 conditions are in his control. What are they? That he should be in possession of tax invoice, he should have actually received the goods or services, and he should have filed the GSTR 3B. That is in his control. But the other 3 conditions, if you see, it is not in his control. His supplier should have paid the tax by September 30th of next financial year. His supplier should have filed GSTR 1 and the data should come in GSTR 2B, and that data which comes in 2B should not be restricted. Even that is also in the hands of the supplier only, because why in our GSTR 2B it will come as ITC not available? That is not because of our mistake, it is because of our supplier mistake only. This information is given in section 38. So section 38 is not given here. So that's a connecting section which I have given in returns chapter. So you can take returns chapter. In this return chapter, page number 223, you can see section 38. So this is about furnishing details of inward supplies. So here we have this information. Now what we are going to see is that even if your supplier has reported the invoices in GSTR 1, but you cannot take ITC. What are those cases? See this. Supplier is a newly registered business. So I am newly registered. You cannot take ITC if you buy from me, even though I add the invoice in GSTR 1. Why like that, sir? Because lot of people are creating fake registrations for the sake of getting the credit. So that's the reason why if the person is newly registered supplier, for few months you will not be able to take ITC from that supplier, but at a later point of time you will be able to take ITC. Understood or not? All these are the temporary restrictions for the time being, but in future you will be able to take. So but why you cannot take now is that your supplier is a newly registered person. You got it? Second case. Supplier filed GSTR 1 but not filed 3B. Not for this month. Not for this month. This month if I have not filed, you need to reverse the ITC, that is okay. This month I have not filed 3B, you can take ITC, and if I not filed 3B by next year September, you will reverse. That is like you have taken the ITC and then you are reversing. But this is what? You cannot take ITC at all. Means in the past months, I have not filed 3B. I have filed GSTR 1. Now for this month, you are purchasing from me, you cannot take ITC even though I filed GSTR 1. You got it? So tell me 2 restrictions. Number 1, your supplier is a newly registered person. Number 2, Your supplier has filed GSTR 1 but not filed GSTR 3B. Then number 3, supplier liability in GSTR 1 is greater than 3B. What is the difference between second point and third point? Second point, filed GSTR 1, not filed 3B. Third point, filed both, but there is a mismatch in the liability. Means what he is doing, he is showing more liability in GSTR 1, because at the time of filing GSTR 1, you don't have to pay the tax now. Only at the time of filing 3B, you need to pay the tax. So therefore, I am reporting more liability in GSTR 1, gave you credit, but I filed GSTR 3B with a less liability. So there is a difference. In GSTR 1, I showed a liability of 20 lakhs. But in 3B, I paid a liability of only 2 lakhs. So because of this reason, if you buy from me, you cannot take ITC. Are you getting this? But all these things, isn't it illogical? How you will know your supplier will pay tax or not? How you will know your supplier will file 3B or not? How you will know whether your supplier is fresh or not? I mean, newly registered business or not? Okay. So how you will know all those things? Yeah. So whether we will go and ask them, sir, are you fresh? Means newly registered. So, or did you file GSTR 3B, not file GSTR 1? Or how much liability you have shown? How we will know all those things? So they created one provision. You are also listening. Okay. I am also telling. Supplier ITC in GSTR 3B is greater than 2B. Whose ITC is greater? Not you. Your supplier has taken input tax credit in his 3B more than his 2B. So you will not get the credit. You understood or not? Your supplier ITC in his 3B is more than his 2B. So you are purchasing from that bad boy. So you cannot take ITC. Okay. Then next. Supplier has received a demand notice and defaulted in payment of tax. Who? Your supplier has defaulted in payment of tax, so you cannot take ITC. Why? Because you purchased from him. You understood? Then, supplier has not fulfilled the conditions of Rule 86B. What is this Rule 86B? One rule is there which says that every person whose liability is more than, in a month, if their turnover is more than 50 lakhs, they have to pay 1% of their liability through cash ledger. So this 86B came during COVID time. What happened in COVID time? So lot of people had input tax credit because their sales was not that great. But this input tax credit, if fully used for payment of liability, government will not get any revenue. Will you agree with me? Because you have a lot of ITC, you will use your ITC for payment of liability, so government will not get any cash flow. So government started asking everyone, pay 1%, 1%, 1% like that. So that 1% only 86B. What is that? You have to pay 1% of your liability through cash ledger, even though you have sufficient balance in the credit ledger. Understood? Even though you have sufficient balance in the credit ledger, but you have to pay 1% of your liability through cash ledger. That is this. So if your supplier has not fulfilled that condition and you make purchase from him, you cannot take ITC. You understood? Okay. So tell me, what are the cases where because of your supplier's mistake, you will be penalized? Come on. Total 6 cases. Supplier is a newly registered person. Number 2. Supplier filed GSTR 1, not filed GSTR 3B. Number 3. Supplier liability in GSTR 1 is greater than liability in 3B. Number 4. Supplier ITC in 3B is more than 2B. Then notice, supplier has defaulted in payment of tax and notice is served to him. Last point, supplier not fulfilled the condition under 86B. Now if you purchase from him, you cannot take ITC. But this is one of the worst section that any government could create. Okay, but our government has created, because how we need to ensure that this and all is not happening. Practically it is not possible, because you will not have control over your supplier unless otherwise if your chartered accountant is only the chartered accountant of your supplier also. You understood what I am telling? You are purchasing something and you appointed me as a client. Okay. Now I am only your chartered accountant, and for your supplier also I am only chartered accountant. Then I will ensure that, so I am properly filing it and I give the credit to you. You got it? So therefore, make purchases from only those suppliers whom your chartered accountant recommends. Otherwise, don't buy from them. You got it? So, but however, practically it is not possible, because your supplier, whether he files returns or not, whether he is complying with the provisions or not, is not under your control. Then, sir, is it permanently it is excluded? No, it's not permanently excluded. Suppose if your supplier rectifies his GSTR 3B, again it will be released for you. You can enjoy. If your supplier has defaulted, so it is restricted. Suppose if the supplier starts paying the taxes properly, it will be given to you. Are you understanding? So is this a temporary restriction or a permanent restriction? Temporary restriction only. Okay. Then, so now you got the clarity as to why it is given there that way. What is that point that is given there? If you are making purchases from a supplier and that supplier reported the details in GSTR 1, but in your GSTR 2B it is kept under restricted ITC. That is this. Then look into the next condition, 16 subsection 3. Come back to page number 105. You understood these 8 conditions? Yes? Still AC not working? Only 4 AC is working. Huh? Sorry, pa. I started with that note only. Okay. So, time na pandrathu. Fine. We'll see this. Section 16, subsection 3. What does it say? Suppose if depreciation is claimed on GST component, then you cannot take that as ITC. Where? As per income tax. As per income tax section 32, we follow block of assets method. So how will you compute the block of the assets for depreciation? Opening WDV of the block, add additions, purchases, minus sale or disposal, closing WDV of the block. On that closing WDV, you will compute the depreciation. Suppose if while adding the asset, if you add the full value of the asset, for example, you purchased the asset for 10 lakhs and the GST paid on that asset is 1,20,000. So 10 lakh into 12%, 1,20,000. How much you need to add in the block? 10 lakhs or 11,20,000? 10 lakhs. Then only you can take the ITC of 1,20,000. Suppose if you add in the block 11,20,000, on that 1,20,000 already you are claiming depreciation. If you claim depreciation, your income tax liability will come down. Am I right? So therefore you are enjoying the benefit. Again, you cannot enjoy the GST ITC also here. So that is what section 16 subsection 3 says. ITC not available if depreciation is calculated on tax portion. Then 16 subsection 4, time limit for availment of ITC. What is the time limit for availment of ITC? That is 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. Is it due date of annual return or actual date of annual return? Actual date of annual return. See the words carefully. It is not the due date of annual return, actual date. What is usually the date of filing annual return? 31st December of the succeeding financial year. Okay. So, therefore, if the invoice is pertains to, if the invoice is pertaining to date 12 March 2023, okay, invoice is pertaining to the date 12/3/2023. What is the financial year for this? Financial year 2022-23. What is the time limit for availment of ITC? 30th November of the next financial year. What is next financial year? 2023 only. Next financial year, yeah, next financial year is 2023-24. So in that 23-24, when November will come? 30th November 2023. Or B, date of filing annual return. Usually what is the date of filing annual return? 31st December. We can file before or after. Correct? Yes or no? Suppose if you are filing on 31st October 2023 annual return, which is earlier? 31st October 2023 is the earlier date, so that is the time limit for availment of ITC. Suppose if you file the annual return by 31st December 2023, then what is the earlier date? 30th November only. Suppose if you file the annual return late, so you file the annual return in January, so 30th November 2023 or 31st January 2024, which is earlier, is 30th November. So generally, majority of the cases, what will be taken as the due date? 30th November of the succeeding financial year. That is a time limit for availment of ITC. But only one case, it may be before date. When if you file the annual return before 30th November, which is practically not possible. Because 31st December due date means on 30th itself our people are not filing. Why will they file before 30th November? Exam application date is, due date is 30th September means we will wait till 30th September. On 30th September only we will make the application. Correct or not? So for us due date is the date. Okay. Whereas, why practically that much in advance a person will be filing? No. So that's why majority of the cases, whichever is earlier is 30th November only. That is the time limit for availment of ITC. Now, see the point here. First you avail the ITC. Concentrate, please listen. First you avail the ITC. And you reverse the ITC. Why you reverse the ITC? Because supplier not filed GSTR 3B by 30th September. So you reverse the ITC. Again you are re-availing. But now the time limit is over. Okay. First you availed ITC somewhere for 25th October 2023 is the invoice. Okay, this is the date of invoice. So you availed ITC. When you availed ITC, which month you availed ITC? October 2023. And the supplier did not file GSTR 3B by September. So you reverse the ITC. When you reverse the ITC, you reversed ITC by say November 2024, you reverse the ITC. Again, supplier filed GSTR 3B by December and you want to re-avail the ITC. You want to re-avail the ITC in December 2024. But what is the time limit for availment of ITC? Next year, November. But here next year, November already over. Now, can you re-avail the ITC? Yes, there is no time limit for re-availment of ITC. The time limit is only for the first time availment. Is it clear? Only for the first time availment, we need to check the time limit. Suppose if you have availed the ITC, you reversed it, and again if you want to re-avail, you don't have to check the time limit. That is this point. Exception, re-availment of ITC reversed earlier. So this time limit is not applicable. Then, so these are the 4 subsections that we have completed. Section 16.1, 2 basic conditions. 16.2, 6 additional conditions. 16.3, depreciation related. 16.4, time limit for availment of ITC. Now let's see some FAQs on this. What are the various tax paid documents on the basis of which ITC can be availed? Already this has been tested in one attempt for 4 marks. Total 4 documents you remember. What are the 4 documents? Number 1, tax invoice. Number 2, debit note. Number 3, bill of entry. Bill of entry we file at the time of import. Bill of entry. And number 4 is input service distributor invoice. ISD invoice. These are the 4 tax paid documents. What is input service distributor? Actually, this concept is not there for your exam, but just for understanding purpose, know it. So there is a head office. There is a head office. This head office is having 3 branches. Branch office 1, branch office 2, and branch office 3. Now, there is a chartered accountant. This chartered accountant provided the audit services to these 3 branches. And will he raise invoice to each and every branch? No. He will raise invoice directly to the head office. So to the head office, this chartered accountant raised the invoice. Now the head office can take the ITC. Okay, but what it can do with that ITC, it can't do anything because head office as such is not having any transactions. So where the transactions are in the branch office. So say this invoice is for 10 lakhs plus 18%. So how much ITC head office will take? 1,80,000 will be taken as ITC and will be distributed to each and every branches. So based on the turnover ratio, say for example 1 lakh given to branch 1 and 60,000 given to branch 2, 20,000 given to branch 3. Now as head office is taking the credit on input services and distributing the credit, head office is called as ISD. They are taking input service and they are distributing it. So what is the name of them? Input service distributor. To distribute this credit of 1,60,000 and 20,000, they will be giving a invoice called as ISD invoice. Okay, that invoice will be called as ISD invoice. So that is with respect to this. So tell me, what are the 4 tax paid documents on the basis of which credit can be taken? Come on, pa. Tax invoice, debit note, bill of entry, ISD invoice. These are the 4 documents. What is debit note? Whenever there is an increase in the invoice value, like whenever supplier wanted to collect some extra amount from the recipient, supplier will be giving a document to the recipient called as debit note. Already invoice is given. Now some extra amount needs to be collected. For that a debit note will be given. Because recipient always shows what balance in supplier's books? Recipient shows what balance in supplier's books? Debit balance or credit balance? Recipient is debtor or creditor. You are my recipient. You have to pay some money to me. Recipient is debtor or creditor for the supplier? Debtor. If debtor balance increases, what we will do? Debit. So that's why the document name is debit note. Okay. And debtor balance decreases. What will I do? Credit. So that's the reason why the name of the document is credit note. Understood or not? Now when the debtor balance will increase, can you give me an example for that? Suppose if I am collecting interest from you, already invoice I raised. Now extra, you have not made the payment on time. So I am charging some interest from you. So what is the entry for this interest? In my book, supplier's books. In supplier's books, what is the entry for interest receivable from the recipient? Recipient account debit to interest income. Am I right? So I am making a debit to the recipient. So what is the name of the document that I need to give you? Debit note. Now I gave you a discount. What is the entry for discount? Discount is loss for me. So discount allowed account debit to recipient. So recipient balance is coming down. So what is the note that I have to give it to you? Credit note. Remember in GST, debit note and credit note is given by dash to dash. Supplier to recipient. Recipient balance dash debit note. Recipient balance dash debit note increases. Recipient balance dash credit note decreases. Understood? Now that's why we don't have credit note here, because when I give credit note to you, what will happen? You will not take ITC, you will reverse the ITC. So what are the various tax paid documents? We have only debit note, not the credit note. Then what are the contents of a valid invoice for availing the ITC? That is, I recently purchased one iPhone 15 I purchased, okay, and this iPhone 15 is 1,59,900 rupees only, okay, and really 1,59,900. 1 second. Okay, So 1,59,900, I purchased one iPhone. On that, 18% is the GST. Okay. And I asked the supplier to give me the GST invoice. So I wanted to take the credit. What he did is that in that shop, one small slip was there. Usually supermarket and all, when you buy, they will give one slip now like this, one small slip, like that one small slip he has given. Can that small slip be taken as invoice for the purpose of availing ITC? Because if I want to avail ITC, I should be in possession of tax paid document. So tax paid document is what? Tax invoice. So this small slip is there. Can this small slip be treated as the invoice for availing the ITC? So yes, provided this has the 5 details. What are the 5 details that should be present in that small slip? GSTN of supplier, GSTN of supplier, and GSTN of recipient. Of course, otherwise how we will report in GSTR1? So GSTN of supplier, GSTN of recipient. Then description. What is it? What goods are, services are. Then value and tax. Then place of supply. These are the 5 fields that should be there. What is the first thing that you need to remember? GSTN of supplier and recipient. Number 2, description. Number 3, value. 4, tax. 5, place of supply. If it is interstate supply, then that document will be called as a valid document for taking ITC. But this is not called as valid tax invoice from the supplier point of view, because generally in tax invoice, lot of details needs to be given. That is, address should be mentioned, supplier address should be there, recipient address should be there, HSN or SAC like that. For goods there should be HSN code. For services there should be SAC, and it should be authorized sign like that. Lot of details are there in tax invoice that should be there. But as you are taking the ITC, for you these minimum details, if it is there, you enjoy the ITC. And if they want to levy penalty, they will levy penalty on the supplier. Okay. So therefore, come on, tell me what are the contents of a valid tax invoice for availing ITC? GSTN of supplier and recipient. Good. Next, description, then value, then tax, then place of supply. Look into the third FAQ. When goods or services are not received but invoice is available, can ITC be availed? So that is bill to ship to transactions. What does it mean? Say this. You have completed CA, Inter, and you joined as bonded labor in one CA firm, okay, as article student. So there is a CA firm. In that CA firm, you joined as an article student. And what happened? You asked the CA firm that, see, you are taking lot of hours of my work, and tax audit season, this season, that season and all, I am doing overtime. Many times I sleep in the office itself, of course, all alone. And therefore, okay, so therefore, I need some benefit. What is that? My CA final exam fees you need to pay, or my CA final coaching fees you need to pay. Like that you are asking the CA firm. And the CA firm agrees to pay the fees, your final coaching fees they have agreed to pay. What could be that final coaching fees? To a CA coaching center, they are making a payment of 50,000 rupees plus GST 18%, that is 59,000. They have made the payment. 59,000 they have made the payment. Actually your fees they have paid. Okay, because in CA final new syllabus only 5 subjects, 10,000 per subject on an average. So 50,000 plus GST. You understood? Be happier. You are really lucky to be in this period. Okay, wherein only 5 subjects you have in CA final, and one is that multidisciplinary case study, which is summation of all the subjects. You don't have to prepare separately for that. If you study this 5 subjects, that information only is there. So therefore 5 subjects only. Okay, and unfortunately you are in old syllabus for CA intermediate, but don't regret for that, because usually what happens, old syllabus to new syllabus, when there is a migration, okay, so this stock clearance sale and all will be happening. So like many years, some people will be there and this will be thrown, pushed, okay? Somehow you clear. We don't want the baggage for the new batch or new syllabus. Like that, many times it happens. But when there were parallel attempts, they will mandatorily fail the students to make you write in the new syllabus. But this attempt is not like that. This attempt is not a parallel attempt. This attempt is actually a switchover attempt. So November 23 is really a golden chance for you. Put some little bit effort, you are going to definitely clear. Don't listen to anyone telling that November 23 papers will be difficult. Actually, it is right in case of a parallel attempt. I saw that. So May 2018, when new syllabus came, old syllabus also they continued for 2 attempts. At that time, old syllabus papers was very difficult because ICI wanted them to come into new syllabus only. But this attempt is not like that. So this attempt, November 23, if you have, non-availability of time to write only group 1, you are writing, thinking, etc. and all, ignore everything. Just 1 month, put your effort and write all the subjects. You don't know, miracle will happen. You will clear CA intermediate. Trust me, it will happen. Okay. So therefore, don't miss this attempt at any cost. November 23 attempt, even if you are not preparing also. So every subject, okay, in YouTube, here and there, lot of revision classes will be there. Watch that revision classes and go and write something. Who knows if you are getting 40s and 50s and all, because of which you clear one group, okay. So no one will ask after coming into CA final, how much percentage you got at CA intermediate. No idiot will ask. Because if they ask, they don't know anything about CA course. You tell 95%, who will know? Okay. So therefore, no one will be asking about that. So that's why, please put little bit extra effort and try to knock it off this time. Fine. So therefore, in CA final, fees is paid by the CA firm. So, but who is attending the coaching? Who is attending the coaching? The student. Article student is attending the coaching. Now, CA coaching center raised the invoice to the CA firm because who made the payment? That CA firm made the payment. So invoice is raised to the CA firm. Now, can the CA firm take ITC is the question here. Okay. For which, what does the provision says? If goods or services is given to a third person on behalf of the recipient. Who is recipient here? Not student. CA firm. CA firm is the recipient. On behalf of recipient, to whom the services are rendered? Student. So student is the third person. So can the recipient take ITC? Yes. This is known as deemed delivery concept. On behalf of the recipient, if goods or services are delivered to a third person, so it is deemed that the recipient has received the goods or services and recipient can definitely take ITC. But only one small twist here, that this student should still be into articleship. Otherwise, it will not come under course or furtherance of business of CA firm. Is it clear? If it is to be into the course or furtherance of business of CA firm, the student should be still into the articleship. The moment he completes the articleship and thereafter if CA firm pays the coaching fees, so then in that case, CA firm cannot take ITC because he is no longer an article student in that firm. Okay. This is in the context of services. Let's see another example in the context of goods. That is, there is a seller who is located in Tamil Nadu and you are the buyer. You are also located in Tamil Nadu. You are placing an order with the seller to deliver the goods to your customer. Okay, your customer. And where is that customer located? Say in Andhra Pradesh. Now in that case, so seller rather than delivering the goods to you in Tamil Nadu, he delivered the goods to the customer in Andhra Pradesh. Got it? Now, can the customer in Andhra Pradesh take ITC? No. But who can take ITC? Only the buyer to whom the invoice is raised. But one of the conditions says that you should have actually received the goods or services to take the ITC. But in this case, who received the goods? Customer in Andhra Pradesh has received the goods. Even then, it is assumed that you have received the goods and you can take ITC with respect to that. You got it? So tell me, what is this deemed delivery? when goods or services are rendered to a third person on behalf of the recipient, recipient can take ITC. That is, this is known as bill to ship to transaction. In this case, what is the billing address? Tamil Nadu. Because they are raising invoice to Tamil Nadu na. But what is the shipping address? Andhra Pradesh. So which address can take ITC? Billing address or shipping address? Billing address can take the ITC with respect to this. That is this. Then next FAQ number 4. When goods are received in lots, when the ITC can be availed? Only on receipt of last lot. Okay. So usually, no, goods need not be delivered at a time. They may be delivering it on a piecemeal. You placed an order for 100 items. First month I delivered 40. Second month I delivered 30. And third month I delivered 30. Now which month you can take ITC for 100 pieces? Only in the third month. Suppose if you want to take ITC in the first month, second month, what I should do? Instead of giving single invoice, I should give a separate invoice. So remember, this provision is applicable if the goods are delivered in lots with respect to a single invoice. Are you understanding? Sir, single document, single invoice, but the goods are delivered in lots only on receipt of last lot. For example, every lot separate invoice is given. For that invoice, we can take ITC in that month itself. Then, what is the consequence if recipient has not made payment to supplier? Listen, it's a very important point. So recipient has to make payment to supplier. What is the time limit within which recipient should make payment to supplier? Within 180 days from the date of invoice. Now listen, I raised invoice to you. You took the ITC, but you have not made payment to me. Can you still take ITC? Yes. Check in the 6 conditions. Anywhere it is given that you should make payment to supplier, then only you can take ITC. Is it there? You should be in possession of tax invoice. You should have actually received the goods or services, and supplier should pay the tax to government. Supplier should file GSTR1 and make it available to you. You should file 3B and it should not be restricted in 2B. Correct. But nowhere it is given that only if recipient is making payment to supplier, recipient can avail the ITC. Am I right? So therefore, can you take the ITC as and when I give the invoice to you? Yes, you can take the ITC. But there is a condition. What is that? You have to make payment to me within 180 days from the date of invoice. If you are not making payment to me within 180 days from the date of invoice, so much of the ITC that you have availed will be reversed along with interest. What is the rate of interest? 18%. From when? From the date of utilization till the date of reversal. Already we come across this point like this. What is that? Section 41. If your supplier has not filed 3B by September 30th of next financial year, you need to reverse the ITC avail along with interest. Like that, if you are not making payment to the supplier within 180 days from the date of invoice, whatever ITC you avail, you need to reverse along with interest. Again, as and when you make payment to the supplier, can you re-avail it as ITC? Yes. What about interest? No. Interest cannot be availed as ITC. Only whatever ITC that you reverse, that much you can re-avail. Is there any time limit for re-availment? No, there is no time limit for re-availment. So actually, in 2 places we have learned so far that there is a reversal of ITC. What are the 2 places? Section 41 and section 16. In section 41, what is that? If supplier not filed GSTR 3B by September 30th of next financial year, recipient has to reverse the ITC. Now second, here, if recipient not made payment to supplier within 180 days from the date of invoice, so much of the ITC availed by the recipient needs to be reversed. Got it? Along with interest at what rate? 18%. Both case it is common. And interest computation is common provision. From when till when? From the date of utilization till the date of reversal or payment. Okay. Now, one question to you. Concentrate. You made a 60% payment to me within 180 days. 40% you did not pay within 180 days. Now, how much you need to reverse? Full ITC or proportionate to 60, proportionate to 40? Proportionate to 40. Very good. And interest also you need to compute on that only. Now, another situation. You have not made payment to me within 180 days. So, you reverse the full ITC. Thereafter, you paid. 60% to me. How much ITC you can avail? Full or 60%? How much payment you are making, that much only proportionately you can take ITC. Got it? Then I entered third situation, concentrate. I entered into contract with you. I gave you a credit period for 1 year. So naturally you don't have to make payment to me within 1 year. So therefore, whether you need to reverse ITC on expiry of 180 days? Yes, because this provision will override the contract also. Got it? Even though as per contract I can give credit period more than 180 days, but if the recipient has not made payment within 180 days, recipient should reverse the ITC. See this. ITC to be added to output tax liability. If you observe, in some places I said ITC reversed. In some places I said ITC paid. What is the difference between reversed and paid? Simple. If you have ITC balance, you reduce from it. If you don't have the ITC balance, you pay that. Okay? You have ITC balance here. While reversing, you will reduce from that. If you don't have the ITC balance, you need to make the payment. That is the difference here. ITC to be added to output tax liability proportionate to the amount not paid to supplier with interest at 18% if value plus tax not paid within 180 days. Upon payment, ITC can be re-availed without any time limit, but interest paid cannot be availed as ITC. And interest is computed on ITC availed and utilized from the date of utilization till the date of reversal or payment. And we have 3 exceptions to this. These 3 exceptions are very, very important. In these 3 exceptions, 180 days condition is not applicable. What are those? When recipient is liable to pay GST under RCM. Here, recipient only has the tax liability, not the supplier. So, no condition that recipient should make payment to supplier within 180 days from the date of invoice. Then, supply without consideration, 7(1)(c). So, there is some transactions, even though without consideration, these transactions are treated as supply. Consideration itself is not there, wherefrom recipient can make payment to supplier within 180 days. That's why there also 180 days condition not applicable. Okay. Then number 3, recipient made payment to some other person on behalf of the supplier. You got it? Actually, you have to make payment to me. But instead of making payment to me, you made payment to my creditor because I asked you to make payment to my creditor. Is it clear? But it is as good as payment received by me only now. Therefore, in this case, you already made payment to me within 180 days because payment made to supplier, on not to supplier directly, but on behalf of supplier to some other person. So, in these 3 cases, 180 days condition is not applicable. Okay. So, tell me what are the 3 cases where 180 days condition not applicable? Come on. Recipient liable to pay GST under RCM. Then number 2. Supply without consideration. Number 3, payment made to some other person on behalf of supplier. Okay. Now, this is the computation related to, that 180 days, etc. So, mark it as very important question. Have a look into illustration 3. We'll complete this section 16 and take break. Okay, I can understand your situation. So, this section alone we will complete and take break. Okay, don't worry. See this. Mr. Ashok, a registered supplier of hardware parts, supplied goods worth rupees 1,68,000, inclusive of CGST 9,000 and SGST 9,000, to Messrs. Shah Traders under the forward charge on 14/12/2022, for which tax invoice was also issued on the same date. What is the date of invoice? 14/12/2022 is the date of invoice. What is the value? 1,68,000. In that, what is the GST component? 18,000. And who is the supplier? Who is the recipient? Ashok is the supplier and Shah Traders is the recipient. Okay. See, in exam, the common complaint which I have got from many students is that time was not sufficient. Okay. So, because income tax and GST, both you have to write in 3 years. So, what many students said was that, sir, time was really not sufficient for us. So, we did not know how to manage the time. Actually, time management is a challenge really because, income tax also equally we have to write in a separate booklet and GST also we need to write. And when you are reading the question itself, try to, understand what is that given in the question, because you will not have time to read 2-3 times. You will not have time to read 2-3 times, because in the given time itself you need to read the question and you need to write the answer also. That's the reason why. So while reading the question itself, you read some 3 lines, pass, try to understand what is given in the 3 lines. Then again continue. Okay. So short traders under forward charge on 14/12, for which tax invoice was also issued on the same date, but short traders failed to make the payment for such supply along with tax to the supplier and availed input tax credit as on 21/2023. Why 21/2023? Usually availment of ITC, reversal of ITC, utilization of ITC happens in which place? GSTR 3B. When you will file GSTR 3B? By 20th of the month following every month. What is the due date of filing 3B? 20th of the month following every month. So what is the date of invoice here? December. So December month, when he will file 3B? January 20th. So January 20th ITC is availed. Is it clear? Then such availed ITC is utilized for payment of GST liability of March 2023. So when it is utilized, when is it availed? For which month it is availed? Availed. Which month it is availed? Jan. Which month it is utilized? March month it is utilized. So what is the date of utilization? 20th of April. Super pa. Daivame. Super. So because availment of ITC, utilization of ITC, reversal of ITC, all these 3 things will happen in GSTR 3B. For GSTR 3B, what is the due date? 20th of next month. If they give the month of utilization as March, then when it would have been utilized? On 20th of April. Okay, super. Now, whether Messrs. Short Trader is eligible to avail input tax credit on such supply. First, concentrate. So you just take your notebook. We will do the answer, okay, together. So 3 dates we need. Date of availment, date of utilization, date of reversal. These 3 dates you need to find. Come on. Date of availment, next date. Date of utilization, next date. Date of reversal. Check the question and tell me what is the date of availment. 20th January 2023. It's given in the question, just you need to search it. That's it. Okay. You don't have to think. Just you need to see the question, you will get. So 20th January 2023, date of availment. Then what is the date of utilization? 20th April 2023. It is given as March is the month of utilization. For March month, when we will file 3B? 20th of April. So right there, date of utilization 20th April 2023. Then next, what is the date of reversal? Actually, when we will come to know that we have to reverse? After 180 days from date of invoice. Now count 180 days from date of invoice. What is the date of invoice? 14 December 2022. From there you count 180 days. December how many days pa? 31 minus 14. 17 days in December. Just in calculator you add 17 days December. Then January 31 days. February 28 days. March 31 days. Then April 30 days. So far how many days you got? 137 days. Okay. And even we will add June. May 31 days. So 168. Balance 12 days for 180. So 12th of June. So therefore, what is 180th day from the date of invoice? Wait. That is not the date of reversal. That is only 180th day. That is not the date of reversal. How on the date itself you can reverse? Not possible. So that is 180th day. You will come to know the fact that you did not make payment within 180 days. On which date? 12th June 2023. For 12th June 2023, you came to know. For June month, you will do the reversal. So when you will file June month return? 20th of July. So what is the date of reversal? 20th July 2023 or 24? 2023 or 24 year. So this is December 2022. From there we counted. So 23 only. Okay. 23 only. Don't get confused. I will confuse you, but you should be strong enough. Okay. So 2023, 20th July 2023. Again, I am repeating how you got that 20th July 2023. Carefully listen. Date of invoice 14 December 2022. From there, 180th day is 12th June 2023. And therefore, next month 20th is 20th July, because June month only you know that you have to reverse. So therefore, reversal you will do in GSTR 3B of next month. That is 20th July 2023 is the date of reversal. Understood these three dates? Yes or no? So date of availment 20th January 2023, date of utilization 20th April 2023, date of reversal 20th July 2023. Now, you need to reverse it for the month of June, that is July. How much ITC you will reverse? How much ITC you will reverse? Whatever ITC you have availed and utilized. How much ITC you have availed and utilized? 18,000. So entire 18,000 you need to reverse. Correct? Write down next line. ITC to be reversed. ITC to be reversed. How much is ITC to be reversed? 18,000. Then interest from which date? Date of utilization, that is 20 April 2023 till interest from 24 2023 till 27 2023. That is how many days you count? Don't count 20th April, count from 21st April, because 20th April only you utilize. So you count from 21st April. So in April how many days? 10 days. And in May 31 days. June 30 days. July 20 days. So that is how many days? 91 days. 91 days. Therefore, interest payable equals to, how much is the interest? On what you need to compute? On ITC reverse. 18,000 into rate of interest. 18% into how many days? 91 divided by, this year is what? 2023. 2023 is 365 days only. So divided by 365. Suppose if they give 2020 or 2024, then you need to take it as 366 days. Okay. But for your attempt, 2024 will not come. It's only 2023. So therefore, non-leap year divided by 365. So divided by 365, how much? 808 is the interest that is payable. You got it? So now, this is the answer. I have given already, but I made you to work out as to how you got that. So first, date of availment of 18,000 is 20th January. And date of invoice 180 days is 12th June. So you will make the payment by 20th of July. So you need to count from 20th April to 20th July. So for 91 days you need to compute. So the total amount that you will pay will be 808 plus 18,000, 18,808. Again, as and when you make payment to supplier, how much you can avail it as ETC? 18,000. 808 is gone. That is completely lost for you. You can't do anything with respect to that. So this is how you will get a question related to this 180 days computation. Okay. Then see these points, page number 107. So actually this discussion of 180 days, how to do the computation, everything is given in rule 37. Supplier raises invoice to recipient, recipient avail ITC, payment not made to supplier within 180 days, reversal of ITC along with interest at 18%. Interest computation period, come on, already we discussed, tell me, interest computation period, date of utilization till the date of reversal. Treatment in case of proportionate payment, already we discussed. So whenever we pay proportionate amount, only for the balance amount we need to reverse ITC, or full amount we need to reverse ITC? Only for the balance amount. Confusion as to the rate of interest, is it 18% interest or 24% per annum interest? 18% only. Because in the section 50 subsection 3, they use the word interest not exceeding 24% per annum like that. So therefore, when you read that section, you will think the rate of interest as 24%, but actually it is only 18%. Then, suppose if the availed ITC is not utilized at all, whether you need to pay interest? No. You availed ITC pa, in this example, you availed 18,000. You have not utilized at all. You just kept it in the credit and then you reverse. Are you required to pay any interest? No. Then, what is the meaning of inward supply on which ITC can be availed? Either inputs, input services or capital goods. What is the difference between inputs and capital goods? So, it is a very simple definition. You purchase some goods, charge it to P&L, it is known as inputs. Then when it will become capital goods? If you capitalize it, it will become capital goods. So therefore, we don't know what is inputs and what is capital goods for a person. Depends upon what treatment they adopt, accordingly it will change. Okay. So goods purchased and capitalized is known as capital goods. Goods purchased and charged to P&L is known as inputs. Any service received for business is known as input service. And with this we completed section 16. So on section 16, we will get a question of so far what we have done, that is that 180 days related interest computation, or you can see this illustration 4, wherein consolidated, all provisions consolidated also we may get a question. XYZ Limited is engaged in manufacture of taxable goods. Compute the ITC available with XYZ Limited for the month of October 2023 from the following particulars. For which month we need to compute? October 2023. Inputs A, 1 lakh. One invoice on which GST payable was 10,000 is missing. Can we take ITC? Missing invoice. No. What is the reason that you will write? As per section 16, a person availing ITC should be in possession of tax paid document. In the present case, as invoice is missing, ITC not available with respect to 10,000, but with respect to 90,000, ITC is available. Understood? Again I am repeating, it's not about whether you know the subject or not. It's about how you are going to write it in the exam. So you have to present it properly, which means notes and all you have to write. So therefore, my request to you is that whenever you see the question, don't do the audit of the answer. So when you see the question, don't check what is the answer. Question, answer, correct. So this is called as proofreading or audit, which already everyone would have done before releasing the book. You don't have to do the audit. Okay. What you need to do is that you need to learn. How you need to learn? When you see the question, don't see the answer, take a sheet, rough sheet, and write the answer. And then cross check with the answer that is given. Then you will know what is the mistake that you have done. Then you will be identifying the mistakes which you will not repeat in the exam. You got it? But when you see the question and answer, you will learn the subject. Yes, but you will not get the marks. You want marks or you want to learn the subject? So actually both, correct? Learning the subject, so you have to go and take the classes. Okay. So what is the use of taking the classes? Okay, you have to complete CA final and then you need to take the classes, etc. and all. And I am okay with that. If you become my competitor, I will be very, very happy about that. But that is not the objective. The objective is what? First to clear in exam. So for clearing in exam, presentation is also important. So that's the reason why a lot of people and all, subject amazingly they will tell, this IT is available, this IT is not available. But one word if you write, yes, no, maybe, you will not get marks. So you have to write the full description of that. That's why, okay. Then second, inputs B, 50,000. Inputs are to be received in 2 installments. First installment has been received in October 2023. What is that you will write? ITC cannot be availed. Why? As per section 16, ITC can be availed only on receipt of last lot or installment. In the present case, the first installment is received in October 2023, but not the last installment. Therefore, ITC cannot be availed. First provision. Then in the present case, connect it and then conclude it. Okay. Next, capital goods, 1,20,000. XYZ Limited has capitalized the capital goods at full invoice value inclusive of GST, as it will avail depreciation on the full invoice value. What is your answer? Available or not available? Why not available? As per section 16 subsection 3, if depreciation is calculated on the tax component, ITC not available. Then next, number 4, inputs, input services, 2,25,000. One invoice dated 20 January 2022 on which GST payable was 50,000 has been received in October 2023. What is the date of invoice? 20 January 2022. What is the financial year? Financial year 2022-23. And for financial year, sorry, 2021-22, because it is January, January 2022. So financial year 2021-22. For financial year 21-22, what is the time limit for availment of ITC? A, 30th November of succeeding financial year. What is 30th November? 30/11/2022. Okay. What is the time limit by which we need to take ITC? That is the maximum time limit. But when we will avail ITC is next month 20th itself. But if you miss that, what is the maximum time we have? 30th November 2022 or date of filing annual return, whichever is earlier. Check the question. The annual return for the financial year 2022-23 was filed on 15 September 2023. Actually, it should have been 2023 year. It should have been 2023. Then it will be correct. So therefore, the financial year will be 2022-23. So 30th November 2023 or date of filing and return 15 September 2023, whichever is earlier. Which is earlier? 15 September 2023 is earlier, but we are talking about which month? October month. Can we take ITC? No, because already the time limit is expired. For this invoice, we should have availed ITC by 15 September 2023, but right now we are in the month of October, so we cannot take ITC now. So therefore, this 50,000 rupees invoice we cannot take. Then how much ITC we can take? 1,75,000. So what is that you will write? As per section 16 subsection 4, the time limit for availment of ITC is so and so. And in the present case, the time limit for availing this ITC is that 15 September 2023. However, the transaction is pertaining to October. Therefore, ITC cannot be availed. Then total ITC how much? 90,000 plus 1,75,000, 2,65,000. That is with respect to this. Then in this 16 subsection 4, we learned this time limit. Actually, the same time limit is applicable in 5 cases. For 5 cases, the time limit is common. Time limit for availment of ITC, you can see that in page number 111. Time limit for availment of ITC, time limit for issuance of credit note, time limit for rectification of GSTR1, time limit for rectification of GSTR 3B, and time limit for rectification of GSTR 8. These 5 places, the time limit is same. What is that? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. What are the 5 places? Come on, tell me. Time limit for availment of ITC. Second, time limit for issuance of credit note. 3, time limit for rectification of GSTR1, GSTR 3B and GSTR 8. GSTR 1 already you know what is a return that contains the details of outward supplies. GSTR 3B is what? A consolidated return. GSTR 8 is a return to be filed by an e-commerce operator. So for these 3 returns, the time limit for rectification is this time only. Got it? So with this, section 16 we have completed, and we are left with 2 sections, section 17 and section 18. We'll take a break and thereafter we will continue with that. Okay. Okay, listen. Actually, few students got this confusion. That's why I'm just giving a clarity again. There is no time limit for utilization. Once you avail the ITC, you can use it indefinitely for any number of years. The time limit is only for taking the credit. For entering the credit in GSTR 3B only, there is a time limit, and that too, what is the minimum time limit, maximum time limit? Minimum next month 20th, and a maximum 30th November of succeeding financial year or date of filing and return, whichever is earlier. Okay. Suppose, sir, if I miss the 30th November, can I take the ITC? I cannot take the ITC. But I said, if you take the ITC, you can use it indefinitely. That's what. Once you take the ITC, no issue. You can use it indefinitely for any number of years. But for taking the credit only, there is a time limit. Is it clear? Then, what is the time limit that we have as 30th September? That is not for recipient, that is for the supplier. Your supplier should file the GSTR 3B by 30th September. Then no issue. Otherwise, you need to reverse the ITC. So the 30th September is no way connected to the recipient. That is for the supplier. You got it? Next. So therefore, we have come across few time limits. Don't get confused. What is the 30th November time limit? Time limit for availment of ITC. What is the 20th of next month time limit? That is also for availment of ITC. So we can avail the ITC by next month 20th. If you miss also, you can take thereafter. But what is the maximum time limit by which you can take? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. Then next, what is the 30th September? 30th September, supplier should file the GSTR 3B by 30th September, otherwise the recipient should reverse the ITC. What is the time limit that recipient has to reverse the ITC? 2 months. That is by 30th November. Okay. Next. And availment of ITC, reversal of ITC, utilization of ITC, all these things happens in which return? GSTR 3B. So for recipient, which is the relevant return? GSTR 3B. Then GSTR 1 is for what purpose? Outward supply. So your supplier should report the details in his GSTR 1, then only you will be able to take ITC. That is that. And actually there is some major power issue, it seems. So the transformer got bursted. So therefore, because of that reason, but don't worry. So we will have today class up to 4:15, 4:30. I will wind up for today if the power is not coming by that time. Okay. And next 3 days I am extending till 7 o'clock. So therefore, tomorrow, day after tomorrow, and thereafter I am extending till 7 o'clock. And I'm munadi vitturra or 6:45, 7 o'clock, like that. Reason being, today whatever we are unable to complete, that portion alone we need to discuss for that reason only. Okay, fine. But even if tomorrow also there is some issue, etc. and all, I requested them for Saturday 3 hours. Actually our session will get over by Friday. I want to complete it by Friday. I don't want to extend beyond 4 days. But suppose worst come contingency purpose, Saturday morning 3 hours we will take and we will wind it up, worst come. Otherwise by Friday itself I will complete. Okay, fine. So now look into this. So pray that today power should come by 4:15. Apportionment of credit. Section 17 talks about apportionment of credit and blocked credits. So please concentrate. Apportionment of credit says, if you have some inward supplies which is partly used for taxable and partly used for exempted, you cannot take full ITC, but you can take only proportionate ITC. To what extent we can take ITC? To the extent of taxable supplies, we can take ITC, okay. And suppose if you are fully using for taxable supply, can you take full ITC? Yes, you can take full ITC. For example, say this, you are purchasing some raw material, and this raw material you are using 60% for FGA and 40% for FGB. You are using 60% for FGA and 40% for FGB. And FGA is taxable. FGA is taxable at 12%, whereas FGB is exempted. Okay. Now it is a common raw material which is used for these two, and this raw material is purchased for 1 lakh excluding GST at 12%. Okay. Now in this case, you please tell me how much is the credit that we can take? Can we take full credit? No. Then how much we can take ITC? ITC availed. How much is the ITC availed? 1 lakh into 12% into what by what? 60 by 100, correct? So to the proportion of 60, we can take it. That is to the proportion it is used in taxable, we can take ITC. So how much that will come to? 12,000 into 60%. 7,200 is the ITC that we can take. Now, another scenario, we don't know this ratio. We don't know how much is used for FGA, FGB, because in costing you would have learned something called as bill of materials. Suppose if you maintain properly the inventory record as to which material is used for which finished product, like that, if we maintain the inventory, we will know this. Suppose if you are not maintaining the inventory, like raw material is purchased, we are using it for FGA, we are using it for FGB, but we don't know what is the ratio in which we are using it, and we have FGA taxable at 12%, taxable at 12%, FGB is exempted, and the value is 1 lakh excluding GST at 12%. Then what is that you will do? Simple, we will take the turnover ratio. What is the turnover of FGA and what is the turnover of FGB? In the turnover ratio, we will divide. Suppose if the turnover of FGA is like 6 lakhs and the turnover of FGB is 2 lakhs. Now tell me how much is the proportionate ITC that is available? Come on. ITC availed equals to total 1 lakh into 12% into 6 by 8. 6 by 8 is the ratio. That is 6 by 8 is the proportion where 6 lakhs is taxable turnover and 2 lakhs is exempted turnover. So 6 by 8, how much that comes to? 9,000. So 9,000 is the credit that can be taken. Okay. So therefore in exam, if you get the ratio in which it is used, you take that ratio related to taxable. If you don't have the ratio in which it is used, what is the basis? Take it based on turnover. If inward supply is fully used for taxable, can you enjoy entire ITC? Yes. If inward supply is fully used for exempted, can you enjoy entire ITC? No. If inward supply is partly taxable, partly exempted, proportionately we will take this way. Everyone, you understood? Yes or no? Now, what if it is used for business and non-business purpose? Okay. Then also the same way. For example, we are purchasing some goods, okay, inputs, and we are using 75% for business purpose. We are using 75% for business purpose, and we are using 25% for personal purpose, non-business purpose. Example, a person is having a bakery. He purchased 100 dairy milk chocolates for selling in his bakery, and 75 dairy milk chocolates he sold. Remaining 25 dairy milk chocolates his son has taken, to give it to his friends. You understood or not? Now in this case, so can he enjoy the ITC with respect to all chocolates? No, only with respect to business purpose he can take ITC. You understood? What if we don't have this ratio? We don't have this ratio and it is, say, capital goods. It is capital goods. Example, I purchased one iPad. On this iPad, I take classes, business purpose. When I take this iPad to home, my daughter will be playing games in this iPad, personal purpose. Now, can I divide it? No, I cannot divide this. I cannot divide this. So then what is that I need to do? We have certain rules for apportionment which you will learn at CA final level. So this concept will not be tested for CA intermediate. You got it? If at all they are testing in CA intermediate, they will give the exact ratio in which it is used for business, it is used for non-business. If they have not given ratio, they are not going to ask this question because this concept is not applicable for CA intermediate exam. Even CMA intermediate also at final level only you will be learning this rule 42, 43 etc. There it will come. So right now you don't have to bother about it. That is these 2 points. Goods and services which are used partly for business, partly for non-business, attributable only to business purpose, you can take ITC. Same way, used partly for making taxable and partly for making exempted, you can take ITC only attributable to taxable. And taxable includes zero rated because I told you zero rated will be treated on par with taxable. Okay. Then next, what is this is about 17.1 and 17 subsection 2. Everyone, you understood these 2 points? What is that we have seen? Inward supply partly for taxable, partly for exempted. Proportionate to taxable, we can take ITC. Inward supply partly for business, partly for non-business. Proportionate to business, we can take ITC. Now we are looking into the meaning of exempted supplies for the purpose of ITC. Just now I told you, whatever inward supply used for exempted, we cannot take ITC. What is the meaning of exempted for the purpose of ITC? Listen. There are total 7 points you need to remember as the meaning of exempted. Notified as exempted. Notified as exempted means what? From time to time, government will be specifying certain transactions as exempted. So those transactions will be called as notified as exempted. Example, permit charges is exempted. Permit charges collected by government for permitting the vehicle to cross the border, exempted. RTI charges, for example, CA students who make application for their certified copies, so they will pay some charges. Free or payable? Payable. Exempted, no GST on that. Like that, certain things will be exempted from time to time. So that is called as notified as exempted. Number 2, nil rated. The rate of GST itself will be nil. Example, fruits, vegetables, nil rated. So milk, nil rated, like that. Nil rated supplies. Rate of GST itself is nil. But rate of GST nil does not mean zero rated, okay? Rate of GST nil does not mean zero rated. What is zero rated is a different meaning. What is that? Export of goods or services, supply of goods or services to SCZ. Then, so what are the meaning of exempted supplies? Number 1, notified as exempted. Number 2, nil rated. Number 3, non-taxable. What are non-taxable? Today only we discuss alcoholic liquor for human consumption and petroleum products. Okay, that will be called as non-taxable. Then these 3 general meaning of exempted. But next 3 actually it is not a supply, means it is not chargeable to GST, but even then it will be treated as exempted supply. What is that? Sale of land, sale of building and sale of securities. These 3 are actually not a supply, no GST payable, but these 3 are treated as what? Exempted supply. What will happen because of that? The availability of ITC will come down. You understood? If you have more exempted, less taxable, what will happen to your ITC? Reduces, correct? For simple in this example, we have 60% used for taxable and 40% used for exempted. So we got 7,200. If 10% is taxable, 90% is exempted, will you get this much credit? No. So therefore, if you have more of exempted, what will happen to the ITC? ITC will automatically come down. So what are the 3 transactions? First 3 transactions you need to remember, please. notified as exempted, nil rated, non-taxable. Next three, sale of land, sale of building, sale of securities. Then number 7, supply covered under RCM. When my outward supply is covered under RCM, who will pay GST? Supplier or recipient? Recipient. As supplier is not having liability, supplier cannot take ITC. Understood? In case of supply covered under RCM, liability is on recipient. Now you pay, you take ITC. You got it? Whatever you pay, you will take as ITC. I am not paying, but I made some purchases now. On that, can I take ITC? I cannot take ITC. So when my outward supply is covered under RCM, then also it will be treated as exempted supply for me. So come on, tell me 7 transactions which are treated as exempted supplies. Notified as exempted, nil rated, non-taxable. Then sale of land, sale of building, sale of securities. Then supply covered under RCM. These are the 7 transactions which are treated as exempted for ITC purpose. Means what? When you do proportionate ITC, what is the formula for proportionate ITC? Total ITC into taxable turnover divided by total turnover. There, these things you should keep under exempted supplies. Okay. Then listen, in case of land, building and securities, actually it is not a supply. So we will not do valuation. For others, we will do valuation. For these 3, we will not do valuation. So what should be taken as the value? For land and building, we have one stupid value in income tax. What is that? Stamp duty value that we will take. Okay. Whereas for securities, we will take 1% of sale value of securities. You can see here. For land and building, you will take stamp duty value. But for securities, we will take 1% of sale value. Are you understanding the 7 points? So notified as exempted, nil rated, non-taxable. Sale of land, sale of building, sale of securities. Supply covered under RCM. So these 3 cases, land and building, stamp duty value, securities 1% of sale value of securities. Then interest on loans, advances, deposits. What they are telling? Many people asked department, sir, land, building and securities is not at all a supply and you are putting it under exempted supply. This is actually the criminal intention of the government. Why? Land and building, when you sell, means automatically the exempted ratio will increase. Then the credit availability will come down. If credit comes down, liability increases. Liability increases, their revenue increases. Are you understanding the intention? Okay, that's why they created. And many people asked, so this is stupidity, how can you do that way? This is not ethical and all. Now what they are telling, interest on loans, advances, deposits is actually exempted for payment of GST. No need to pay GST. We will treat it as taxable. You treat it as taxable. Enjoy ITC, like that they are telling. You got it? Interest on loans. Correct. There are 3 transactions which are not a supply. We are treating it as exempted, because of which ITC comes down. But interest on loans, advances, deposits is actually exempted. No need to pay GST, but we are telling that you treat it as taxable for ITC and you enjoy that ITC. But what they have taken from us is one biscuit packet. What they are throwing to us is one biscuit, because interest income is how much for any person? Small portion, correct? Interest income, we will put it in income tax also somewhere in 5th head. Last residual income from other sources. Even while putting final accounts also, interest income will come somewhere in other income, that to other of other income. You understood? And for that small portion, they are telling you enjoy the ITC. Actually, interest income is big for whom? Banks, financial institutions. Correct? For them, this is not applicable. Okay. You understood? For them this is not applicable, which means for banks and financial institutions, interest income is the major income. It will be treated as exempted only for ITC. For other than bank, financial institution, NBFC only, interest on loans, advances, deposits, even though exempted, it will be treated as taxable for ITC. See there. So interest on loans, advances, deposits for bank or NBFC is treated as exempted only for ITC purpose. But for others, it will be treated as taxable for ITC, even though it is exempted for payment of GST. Got it? Then Export of goods or services. Export of goods or services is actually zero rated. Even supplies to SEZ also. But actually it will be treated as what? Taxable for ITC purpose. This anyhow we know that. So what you need to remember is only this 8 points. Okay. Now, apart from this, we have certain notes here, but look into illustration as to how this will be tested in exam. Okay. See this illustration number 5. Illustration 5, you see, Messrs ABC Traders has made taxable outward supply of 20 lakhs, GST at 12% and exempted outward supply of 10 lakhs comprising of interest income 4 lakhs and other exempted supply 6 lakhs during July 2018. Their inward supply for the month is 10 lakhs. Compute net GST payable. First we will analyze the turnover. What is the turnover they have? Taxable 20, exempted. In that exempted also 2. Interest, others. Correct? Now, so taxable is anyhow taxable for payment of GST, taxable for ITC purpose also, nothing special. But interest is actually exempted for payment of GST, correct or not? Just now I told interest is exempted for payment of GST. But for other than bank, financial institution, NBFC, it will be treated as taxable. ABC Traders, other than bank, financial institution, NBFC. So it will be treated as taxable for ITC purpose. Then next, other exempted supplies, exempted only for payment of GST, even for ITC also it will be treated as exempted. Only special point there is related to interest. For payment of GST, if it is taxable, even for ITC also it will be taxable. For payment of GST, if it is exempted, even for ITC also it will be exempted. But exceptions you need to remember. What are those exceptions? Interest. Even though it is exempted for payment of GST, it will be treated as taxable for ITC. Sale of land, sale of building, sale of securities. Even though not a supply, it will be treated as exempted supply. And supply covered under RCM, even though it is taxable in the hands of recipient, but it will be treated as exempted. Like these exceptions only you remember. Here only one exception. What is that? Interest point. So first we need to prepare one table analyzing these transactions. So outward supply normal 20 lakhs. For payment of GST it will be taxable. On that how much is the GST? 12% is given as GST. So 2 lakh 40. Even for ITC it will be taxable. Then interest 4 lakhs is exempted, but for ITC it will be treated as taxable. Then other exempted 6 lakhs. For payment of GST it is exempted, even for ITC also it will be exempted. Now don't see the answer thereafter. What is the total inward supplies? Total inward supplies 10 lakhs. On the 10 lakhs what is the GST? 10%. So 10 lakhs into 10%, 1 lakh. But whether we get full 1 lakh as ITC? No. Because partly we have taxable and partly we have exempted. Yes or no? Now tell me, how much is the proportion of ITC available? Into what by what? Into what by what? 6 by? 6 is correct. 6 is correct because exempted is 6. Is 6 correct? No. Taxable by total. What yaar? What is the formula for proportionate ITC? Total ITC into what by what? Taxable divided by total. Once more. Total ITC into taxable divided by total. Once again. Total ITC into taxable divided by total. What is the total ITC? 1 lakh. What is the taxable turnover? 24 divided by 30. How you know taxable turnover? See the last column. Taxable is 24 divided by 20 plus 4 plus 6, 30. So that will be taken as a proportion of taxable to total. Understood? So that much credit you will be getting. So calculate and tell me 1 lakh into 10%, 10 lakhs into 10%, 1 lakh into 24 divided by 30. How much? 80,000 is the credit available. Understood? And what is your liability? What is your liability? 2 lakh 40,000. 2 lakh 40 minus 80. 1 lakh 60. 1 lakh 60 is the net GST payable. Are you getting this? So in exam, you will be tested with this because it's an untapped area, and maybe if they want to coin this as one adjustment, they can give this adjustment. Okay, be careful with respect to this. Then Apart from this, like one more question also we have. This is related to transportation sector. But we need to know few aspects related to transportation sector, transportation of goods, taxability and exempted. We'll complete that and then come back to this question. So that is transportation of goods. What is the taxability of transportation of goods? Okay. Transportation of goods. Transportation of goods. So we have various modes for transportation of goods. What are the various modes that we have? We have airways, then waterways, roadways and railways. Okay, roadways and railways. What we are learning now is what are exempted. Okay, in these four, what are exempted? In case of services by way of transportation of goods, depending upon the mode, what is exempted? In case of airways, transportation of goods, is there any exemption? Yes, only one exemption is there. Only one exemption. What is that one exemption? Transportation of goods by airways from outside India to India, we pay some freight na. That freight that we pay will be exempted. So what is the service that is exempted? Transportation from where to where? Transportation from outside India to India. Transportation from outside India to India is exempted. But right now we are discussing what are exempted. Okay. We are not discussing taxability and all. We are discussing what are exempted. In case of airways, what is exempted? Only one transaction is exempted. What is that? Transportation of goods by airways from where to where? Outside India to India. We pay some freight now for bringing that goods. That freight will be exempted. Suppose if it is India to outside India, taxable. Within India, taxable. Everything is taxable, only this will be exempted. Then next, waterways. In case of waterways, so transportation of goods by waterways, we have two exemptions. Number one, inland waters. Inland waters. What is inland waters means? River. So whenever the goods are transported through rivers and all, so for that we don't have to pay any GST on that freight, that is exempted. That is called as inland waters. Number two, coastal waters. Coastal waters between places in India. Between places in India, hyphen, not all goods, specified goods. So coastal waters means, what is the difference between inland waters and coastal waters? Inland waters means river. Coastal waters means seaways. In seaways, if you are taking goods from one location in India to another location in India, why we will take the goods in seaways between India to India? Maybe compared to the land route, the port will be near. Example, Mumbai, Surat. Mumbai, Surat is actually very near. Mumbai port to Surat port. Land route is actually very far away, but sea route is very less. Same way, Kochi to Mumbai. So Kochi is also a port city. Mumbai is also port city. So if it is roadways, they have to touch, big route. But instead waters, so it is very easy for them. That's the reason why they do. Even Visakhapatnam, Chennai, Vizag and Chennai, land route is very far. That to Andhra Pradesh, needless to say, roads are so pathetic. So therefore, seaways, it will be easy because it will be very near also. So the freight cost will come down. That's why from one port in India to another port in India, they will transport. That is known as coastal waters between places in India. But not all goods are exempted. Only specified goods are exempted. What are those specified goods? We will see. Okay. Now, next, in case of roadways other than GTA or courier agency, everything else is exempted. What is GTA? Goods Transport Agency. Means what? Any person engaged in transportation of goods by road and issues a consignment note by whatever name called. Usually some transporters will be there. They will collect the parcels from different people and they transport it to a location and hand it over to the recipients. So these people are called as goods transport agency or courier agency. Only these two are covered under taxable, remaining and all will be exempted. Okay. So in case of roadways, what and all is exempted? Other than GTA or courier agency. Other than GTA or courier agency is exempted. Usually we book in porter some vehicles na. So porter, Tata Ace, etc. and all. Whether that will be taxable or exempted because it is other than GTA or courier agency. Even some trucks and all we will be taking on hire to transport goods from one location to another location. Everything will be exempted. Only if it is a goods transport agency or courier agency, it will be taxable. All other transportation of goods by road will be exempted. Then railways. In case of railways, transportation of specified goods is exempted. So any specified goods. So therefore, this specified goods, it came in two places. What are the two places that it came? That is waterways and railways. Transportation of specified goods is exempted. Okay. What are these specified goods? Total 6 specified goods that we have. 6 specified goods that we have. That is agricultural produce. Agricultural produce. Agricultural produce means what? The primary produce out of agriculture, like food, like all the fruits, vegetables, etc. That will be agricultural produce. Number 2, food grains. It need not be agricultural produce. Example, rice, then even processed, like millets, etc. and all these are processed. Okay. So food grains including flours, atta, maida, etc. That is flours, powder form, comma, milk and salt. So food grains, all pulses and all will also come. Pulses, dals, including its powder form. That is gram flour, wheat flour, maida, etc. Milk and salt. Then number 3, organic manure. So using cow dung, we make fertilizers. That is this organic manure. Then number 4, newspapers and magazines. Newspapers and magazines. Then relief materials. Relief materials for disasters, natural or man-made disasters. And then defense equipment. Defense equipment. These are the 6 specified goods if transported by waterways. The two what waters? Coastal waters between ports in India and even railways, the freight will be exempted. So tell me what are the 6 specified goods, pa? 3 related to agriculture. Agricultural produce, food grains including flours, pulses, milk and salt, organic manure. Then newspapers and 2 equipments. What are the 2 equipments? Relief materials, defense equipments. So these 6 specified goods transported in waterways between places in India exempted, railways also exempted. Now, transportation of goods from by way of waterways outside India to India or India to outside India. What is your answer? Taxable or exempted? Transportation of goods by waterways from where to where? Outside India to India or India to outside India. What is your answer? Exempted or taxable? Taxable, because we don't have it in the exemption. Same way airways, India to outside India, outside India to India. Okay. Now, so this part we need to know. So actually this will come in exemptions chapter, but only when you know this, you will be able to answer this question. So that's the reason why I discussed this relevant concept. Now have a look into this question. Power came here? Check. No. Fine. So we'll complete this question and leave for the day. Okay. So concentrate. Pacific International Limited, a shipping company registered in India, has made the following outward supplies for the month of September 2023. Transportation of goods by vessel from India to outside India, 20 lakhs. First you tell me, what is your answer? if it is for GST, taxable, exempted. Taxable by what mode? Vessel, waterways. Waterways, only two exemptions. Whether those 2 points are applicable here? So, taxable. As it is taxable for payment of GST, so it will be taxable for ITC. Yeah, if it is taxable for GST, it will be taxable for ITC. If it is exempted for GST, it will be exempted for ITC. Only few exceptions we need to remember, that already we remembered. Got it? Then, second, transportation of goods by aircraft from India to outside India, taxable for payment of GST. So for ITC also it will be taxable. Transportation of goods by vessel from outside India to India, taxable. So first three are taxable for payment of GST, even it will be taxable for ITC. Next, number 4, transportation of goods by aircraft from outside India to India, exempted for payment of GST. Even for ITC also it will be exempted, because nowhere we have this in exceptions. Anywhere in exceptions we studied? No. So therefore it will be exempted only for ITC. Then next, domestic transportation of goods by vessel from one place to India to another place in India. What is exempted? Only specified goods. Is it given as specified goods? So taxable for payment of GST, and it is not in exception, so therefore automatically it will be taxable for ITC. Understood? Then during the month they have received common inward supplies worth 50 lakhs and applicable rate of GST on outward supplies 18%. Compute net GST payable. First, so here we don't have difference between taxable for payment of GST and taxable for ITC. Everything same, correct or not? First we need to prepare one table. What is a table? Each and every transaction we need to write. For payment of GST what it is, for ITC what it is. So that is this table, okay. Value for payment of GST, for availment of ITC. Everything same. Wherever it is taxable, we will compute the GST also. So what are the taxable turnovers? 20, 10, 15 and 5. How much? 20 plus 10 plus 15 plus 5, that is 50 lakhs. 50 lakhs into, what is the rate of GST on outward supply? 18%. 50 lakhs into 18% is how much? 9 lakhs. So what is the, 12%. The applicable rate of GST on outward supplies is 18%. So how much it will come to? 9 lakhs. 9 lakhs only, na? 3 lakh 60 plus 1 lakh 80 plus 2 lakh 70 plus 90,000. So gross GST payable. What is the gross GST payable? 50 lakhs into 18%, that equals to 9 lakhs. Up to this clear, everyone? Now ITC, you tell me how much we will get. Take your calculator. What is the inward supply value? What is the inward supply value? 50 lakhs. On that 50 lakhs, what is the GST paid? 12%. So 50 lakhs into 12%, 6 lakhs. In that 6 lakhs, what is taxable to total? 50 divided by 55. Total 55. Here only it is there, pa. You have to just open your eyes and see. 55 it is there. So therefore 50 is taxable. Total is 55. So 50 divided by 55. How much is the ITC that is available? Come on. ITC is total 50 lakhs into 12% into 50 divided by 55. How much? 5 lakh 455. You reduce it. Remaining is the net liability. Kindly make note of this. There is a mistake in the answer. So kindly write down this. These 3 lines you write down. So net GST payable. Net GST payable is 9 lakhs minus 5 lakh 45 455. How much it will come to? 3 lakh 54,545. Gross GST payable total 50 lakhs into 18% 9 lakhs. minus input tax credit 50 lakhs into 12% into 50 divided by 55. So this portion only we will get, that is taxable to total. Remaining is the net GST payable. So this you please strike off. This is not applicable. So this is the rectified answer. So this is about 17 subsection 3. So in section 17 we completed 3 subsections, okay. And today what we have seen is introduction to GST, it's a small area, and thereafter we have seen input tax credit, section 41, section 49 subsection 5, section 38, that okay, returns chapter. Then section 16, conditions for availment of ITC. In section 17 actually 5 subsections are there. Apportionment of credit we completed. Then we have a special provision for banking company, financial institution, NBFC, and blocked credit. Then section 18. Okay. So this portion hardly it will take 1.5 hours for me. So that we will see tomorrow. Actually, if we had no power issue today itself, I would have completed this. So that we will complete tomorrow. And today, please go home and try to revise whatever we have discussed today, plus agenda of tomorrow also I will tell you. Please try to revise that, so that if you have any doubts etc. and all, you can ask me tomorrow. So tomorrow we will be, after completing input tax credit, we will be discussing value of supply, okay, value of supply, and thereafter we will see exemptions under GST, okay, because these are all the important areas. I want to first complete the important areas, that's why, okay. So today you please revise value of supply and exemptions under GST. That's the agenda for tomorrow's session, okay.